sector you operate. We have information technology tax, we have NASENI, we have all manners of income taxes you need to add up before you now pay the dividend and you deduct 10%. Effectively, the tax on equity investments in Nigeria is over 40%. This is easily one of the highest in the world. And it's like a contradiction for a country that needs all the investment that we can get. So we want to also address that. We want to not only harmonize the number of taxes, we want to harmonize the revenue collecting agencies. We do not think that we should have 63 plus agencies at the federal government level aiming to collect revenue and taxes of all forms and shapes. Many of them have forgotten the primary reasons why they were set up, and they are competing with the Federal Revenue Service. We even think that even the Nigerian Customs Service should focus on facilitating trade, protecting our border, not trying to generate revenue. That's the work of the tax authority. We want to review waivers and incentives so we can create a level playing field, because if you do not have access, and I do, and I can call someone and I get a waiver, import duties, waiver, income tax, we operate in the same market, you have no connections or contacts, you will not be competitive. Actually, what we end up doing, if you take that along with tax evasion, is when you do not address tax evasion, you create an incentive for those who are doing wrong and a punishment for those who are doing right. I do my business, I make my profit, I pay 30%. You do the same business, you make your profit, you don't pay a dime. You can actually outperform me in the market and send me out of that market eventually. We want to also improve transparency, and we are thinking about some ideas. This conversation is still ongoing, but we're thinking that the unclaimed dividend, which about 2 years ago we had the Finance Act that says, let's give this money to the government. And when the people show up, they can collect their money back. We know that many of them will not show up, right? Because they are dead. Nobody knows that they had those money. We're thinking, why don't we use that to create a fund that we can manage to invest, maybe in Fintech, maybe in some small businesses. And we also have, as part of our mandates, looking at African Continental Free Trade Area. How can Nigeria participate competitively and take the leadership in this very important area for our country? We have an aspiration to say, why can't Nigeria be the hub for tech and startups in Africa? Why can't we be the research and development center for Africa? Why can't we be the innovation center for Africa? Why can't we be a preferred location for headquarters companies, for shared services, for remote work location, the capital market center for Africa? Why can't we? When we're looking at the laws, we actually realize that some of the impediments why we don't today, we are not currently competitive, are based on our laws, including legal provisions and some of them tax provisions. For example, when you call your bank, or sometimes just call anything, call your service provider in Nigeria, chances are that an Indian might pick the phone call to attend to you, even though you are based in Nigeria, your service provider is based in Nigeria. Why is it that they are not Nigerians answering those calls for global organizations? I actually think that we speak better English than the Indians. But the reason is, before I left PwC, 3 global multinationals making revenue in tens of billions of dollars reached out and said, we would like to hire Nigerians in Nigeria to work for us. Please answer the following questions. I knew they were not coming back because we have a provision we inherited from before independence, I think, that suggests that if you have employees in Nigeria, it doesn't matter where you are, in addition to those employees paying their taxes, would ask you to come to Nigeria because we think you've created what we call permanent establishment and you must equally pay your taxes. Imagine I'm a US corporation and I'm looking for smart people to hire around the world to work for me remotely. And somebody says that about Nigeria, but Kenyans don't have the same problem, Indians don't. Why must I insist about hiring Nigerians? What we have done to ourselves is we've shut out opportunities for particularly our young people. In addition to that, we're losing out on the opportunity to earn foreign currency that could have helped us to stabilize our foreign exchange. We are also addressing that. We have an objective to promote entrepreneurship, including MSMEs, rationalizing incentives, and enabling the capital market to grow. So, as I conclude, we think that at the end of the day, we have to work together to address these challenges that we face today. No one has the monopoly of knowledge to fix all of them. And that is why we're very big on stakeholder engagement and public consultation. We already issued our stakeholder engagement plan. If you want to share anything with us, you can go to fiscalreforms.ng. You'll find a lot of information on this dedicated website, including our terms of reference and stakeholder engagement. For those who may not have access to the internet or like to do otherwise, we have a dedicated email account. We have a dedicated WhatsApp account. We have social media accounts. Just remember Fiscal Reforms, NG, and you'll find us everywhere. And for those who still don't want to do any of that, we have physical offices where they can write. They don't even need to type them. They can be handwritten. We will read everything. We have a commitment that every Nigerian, actually not every Nigerian, anyone in Nigeria or elsewhere, that's a stakeholder in the Nigerian project that has something to say will be heard. As part of our engagement plan, we are engaging with all stakeholder groups, including Nigerians living with disabilities, including Nigerians in the diaspora. If they are sending us $20 billion a year, then we need to listen to them. We need to share from their experiences, what they have seen in countries where they live and work. What can we learn from them? This is not an engagement to find a way to tax people who live abroad. No. It is to thank them for their contribution to our economy and see what we can learn from their experiences. So, we'll be looking forward with excitement to the outcome of this conference. I can promise you that once you share the outcome with us, we would act on them on behalf of the country. By the way, even though we were set up by the president as a presidential committee, we quickly realized that the issues we have to deal with go beyond the federal government. So we went to the National Economic Council. The VP facilitated that for us, and we asked the governors to adopt us as their committees as well, and that they have done. So we can now confidently say that we have a national committee looking at that important area of fiscal policy and tax reform. By the way, our work is divided into three broad pillars. One of it is fiscal governance, essentially saying, how do you manage your finances? Borrowing, revenue, spending. Not only should you spend well, the priority of your spending must make sense and must correlate with the priorities of your people. If you have 133 million people living in multidimensional poverty, maybe your priority is not going to the moon, building flyovers and airports. Maybe it is to provide clean water, basic education, roads from farm to the markets, and so on and so forth. The second pillar is revenue transformation, of which tax is a component, but we also have non-tax revenue, including government assets, government-owned enterprises, and natural resources. How can we optimize value? I was speaking to the CEO of Ministry of Finance Incorporated yesterday, and the numbers we're looking at are mind-boggling. We just have trillions and trillions of assets all over the place that are being wasted or sometimes mismanaged. And the third pillar of our work is economic growth facilitation, which I already told you about. So I'll close Again, just to repeat, that we look forward to the engagement with you, not only just out of this conference, but on an ongoing basis. Please do share with us your concerns, and more importantly, your recommendations. Because more often than not, it's easy to complain, but finding the solution is really what we are focusing on, not the past. I'll close with this quote that I always like to say. And it was a quote credited to Abraham Lincoln, which is that if you do not like the Nigeria you see today, I haven't met, by the way, any Nigerian who says, this is the Nigeria of my dream, not a single one. But you will see that the love and passion that Nigerians have for their country, even after they have left, is unparalleled. Therefore, if Nigeria of today is not the Nigeria of our dream, we can work together to create that Nigeria that we truly want, and I think that we also deserve. Abraham Lincoln said, and I quote, "The best way to predict the future is to create it." Thank you very much for your kind attention.
You remain. Thank you very much. Thank you. We have barely 10 minutes or so to engage in and ask questions. Thank you very much for a wonderful paper and presentation. The microphone is moving around now for you to engage in. We have 10 minutes for this engagement, and then we'll let him go. Okay, we're already having hands up. Please take the microphone there.
Thank you, Mr. Idiri, for the presentation. For the records, my name is Nona Au. I am not tempted to ask the question, but I thought that it's important that some things are said concerning the job that you have at hand. If my late father built a house in Abeokuta and he passed on, and we probably didn't know the next 20 years that he had a house in Abeokuta, does that house become abandoned property for Ogun State? I ask this because one of the things that I've heard several times from government end is that unclaimed dividends should go to government. Before now, that money becomes status bar after 10 years, and it goes to the company that the initial investment was made in. So I would think that as a committee, one of the things you probably should do is to make the companies that allow that sum to accumulate to pay an interest higher than the market rate, and then you see that unclaimed dividends, most likely, if it doesn't disappear, it will reduce substantially because the company then knows that there's a penalty attached to it. I was also very elated when I heard you talk about tax being an instrument for growth and development. And I'll be asking, what are we likely to do differently with small companies as a way of allowing them to grow with the intention that long time down the line, they'll probably make higher contribution to the nation's economy than everybody is running after everybody in making sure that they collect their head, their leg, and their arm even before they start to produce. And lastly, I was also happy that you talked about the states have taken interest in the work that you do. I live in Lagos, and I've experimented going from Alabado to Obalende, and I was amazed that there were over 50 bus stops that Agbero will collect money from Danfo operators. Should this your committee work gets ended, will Lagos State believe that you should take away Agberos from Lagos? Because if they are going to ask you to do work on their behalf, I also think that you should be asking them to give a commitment that they will also take the outcome of your findings. I want to again thank you and thank MTN for this opportunity.
Thank you very much, sir.
Thank you very much for the presentation. Tracy from SBG Securities. A couple of questions on my end. First, on tax collections on telecom sector. Yeah? You've talked about consolidating the existing federal taxes, but I'm more curious about the benchmarking of Nigeria versus other countries, particularly in regards to excise and VAT. So first on excise, if you look at the financial services sector, when it's telco-led, it's a very big channel for improving the access point in terms of taxation for the informal sector. So is Nigeria thinking about expanding its taxation to mobile financial services? And then second, if you look at VAT rates in Nigeria versus other countries, Nigeria as well looks much lower than the rest of the other countries. So as you consolidate, is the strategy as well to increase the tax base in the telecom sector, or do you think that with the current inefficiencies, if addressed, there's no need for you to tap into the telecom sector? Thank you.
You got that? Okay. We'll just take one more and then we'll wrap up this session. One more.
Good morning. My name is Sadiq Abu. I work with ABSA. Thank you, Mr. Oyedele, for your insightful presentation. Two questions, if I may. I know your committee has identified certain quick wins. I do know that that is a focus of the committee. Can you shed some light in terms of the timelines for some of these quick wins? Do you anticipate that some of these wins will come in the next Finance Act? And can you sort of like give us your best sense of some of those quick wins that we expect to see perhaps in the next Finance Act? Thank you.
Thank you very much. So, Mr. Oyedele, over to you.
Thank you very much for those excellent questions. They're really very nice questions, so thank you very much. The first one on unclaimed dividend. You know, my personal view when this was, I was a member of the committee when this discussion was taking place before the Finance Act was amended. And my personal view that I shared at the time was we should spend our energy trying to find out why is it that we have so much unclaimed dividend, and try and address those impediments first, rather than quickly saying, if they haven't claimed it, government can borrow it. But that was my personal view, and of course it did not fly. So we're where we are today. I have to say that based on the research we have done, it is not strange for the government to be interested in the unclaimed dividend. Because essentially what we had before was, after a period of time, that money goes back to the company. Actually, what you've done is you've appropriated the asset of party A and you're giving to party B, C, D, right? That's what you've done. So it's not like that's a perfect solution and government came up with the option of let's borrow it. And we're now thinking maybe government should not borrow it. How about we use that fund to promote the capital market and by extension economic development? So that's still being debated, and we welcome input from everyone. Now, your other question is, what are we going to do differently for SMEs to grow? One thing I have said consistently, even before my current role, is that I know enough about the challenges facing businesses in Nigeria to even say that when you're asking for incentives, you're asking the wrong question. That what you should be asking for in Nigeria is to remove these incentives. The good thing about removing this incentive is it does not cost government money, but it saves the private sector a load of headache and even money as well. You just free up the whole space for economic activities to be stimulated at scale. So for SMEs, we think they will be the biggest beneficiary of our tax harmonization. Indeed. Okay, thank you. So that at the end of the day, a small business owner will not have to pay 15 taxes. Nobody even knows where those taxes start and end, which is a problem by itself. Maybe a small business will only have to pay 1 or 2 taxes, and they can pay that on their mobile phone, start something, start something, and then the receipt comes on the mobile phone. We want to outlaw cash payments for taxes. So that way, the little amount that we pay gets to the government, there's proper accountability, and the people who are paying them don't have to pay so many, they pay just so little, and then it's properly accounted for. Would Lagos State agree for us to remove agberos? That's a very important question, but we're doing this for Nigeria, and we know that Lagos State is on board. In fact, the governor of Lagos State is very eager. When I said we're coming to visit some governors, just so we also localize our intervention and hear them out. So he's very eager for us to meet. So we're going to find a space for everyone in the new system we are trying to create. Maybe those agberos will not become people who ask you, show me your mobile phone that you have paid, right? But will not ask them to be collecting taxes for Nigeria anymore. We've also seen many instances, especially at the local government level, where tax collection is outsourced. You know, someone will say, give me 100 million naira, and then you can collect these levies and taxes for as long as you want. And they just print receipts, and they're collecting taxes without accounting for it. The second question is tax collection on telecom services and the telecom sector, especially excise tax and VAT. Are we planning to introduce mobile financial services levies? Is there a strategy to expand the tax base in the telecom sector? The answer is, we see the telecommunication sector as an enabler of the economy. But it also doesn't mean that we should not tax it. What it means for us is we should reduce the 43 taxes maybe to 3 taxes. And one of those taxes could then be an excise tax on telecommunication that you would design in a way that you protect the vulnerable people. For example, if all you do in a month is load credit of 200 naira to flash people all over the place, or another 300 for data, you should not be paying taxes, right? So we can create a threshold to protect those people, and then the rest of us can pay. In many of the East African countries, Kenya, Tanzania, they have excise on telecommunication as high as 18% in Tanzania, for example. So we'll design that properly. We'll also be engaging with the sector in coming up with the design, but that would be only after we have sorted out the issue of multiplicity of taxes before we consider that. We're not planning any taxes on mobile financial services. We think we need financial inclusion. VAT is also an interesting one. Nigeria's VAT system is very different from the rest of the world. No, they will tell you easily, including the IMF, that our 7.5% is one of the lowest in the world. But that's a single story. The complete story is that in over 100 other countries around the world, when you say value-added tax, you get input credit for almost everything, including services and capital investment. That's not the case in Nigeria. So while the headline rate is 7.5%, it can feel like 15%. So what we're saying to ourselves is, we also have ECOWAS protocols that we've signed up to, which require that we increase the rates. While we are increasing the rates, we will reform to give full credit, including on services, and that will benefit telecommunication, for example, as well as on capital investment. You built a factory, you bought plant and equipment, all of those things, you get full credit for the input VAT, so that actually you end up with businesses not bearing the cost of VAT. It goes to the final consumer as the way it should be. Finally, on the quick wins, the question is, what is the timeline when should we expect to see implementation? Will there be something in the next Finance Act? So the quick wins, we presented to Mr. President about 2-3 weeks ago. I requested Mr. President to allow us come to the Federal Executive Council to discuss with the Cabinet, which he obliged. In fact, even asked whether we need a special FEC session. We're supposed to do that 2 days ago, but Mr. President is out of the country, so now we've been rescheduled for next Monday. But we've actually started the implementation of some of the recommendations already. Some of our recommendations will be implemented by the Ministry of Finance. Some of them will be implemented by Mr. President through an executive order. Some of them will be implemented by the National Assembly. So as we speak now, we have a draft emergency economic intervention bill trying to amend different laws, including laws in Nigeria, can you imagine, that require that you pay taxes and levies in dollars in Nigeria. When we're speaking to the CBN, these numbers are not even small. They're in the region of $3 to $3.5 billion annually. Now, this is dollar, the little dollar you have in Nigeria. You are creating demand against it. So the person has bought a subscription from Zoom, $1,000. There is VAT and withholding tax on it. The law says that VAT and withholding tax you must equally pay in dollars. Not only is that guy finding $1,000 to pay Zoom, he goes back to the forex market looking for about 200 naira to pay Nigerian government. These are some of the issues we've created for ourselves. We have the law now being amended to say, let Nigerian companies and individuals pay taxes and levies in naira. MP and the master should not ask you to pay $400,000 per vessel. As a Nigerian company, where do you find that? So, in summary, our quick wins are now being implemented. That process will continue. The work of my committee is divided into 3 phases: the quick wins, the critical reforms, and implementation phase. Quick wins is what we're doing now. Critical reform is we are rewriting all the major tax laws in Nigeria. And in fact, we are amending Nigeria's constitution to clarify taxing right by levels of government and to ensure that the revenue that they share has some correspondence and correlation with the responsibilities assigned to them by the constitution, for which we all have to hold them to account. The final phase is implementation. Quick wins is 30 days, critical reform 6 months, implementation is 1 year, all 3 running concurrently. Thank you very much for the opportunity.
Thank you very much. Thank you. This man is as smooth as silk. Thank you. As he steps down, let's appreciate him, ladies and gentlemen. Thank you.
Very much.
Thank you very much. Thank you. All right, Mr. Yedele, I would like to have a photograph with you.
Bustling with potential.
To join him, let me welcome here the Honorable Minister of Communication, Mr. Yedele, His Highness, the 14th Emir of Kano, Mr. Raf Muputa, Dr. Ernest Ndukwe, Mr. Carl Turiola, and Mr. Mudukwe Kadri on stage here. Okay. Please hold on that video. Hold on. Okay. Thank you very much. Thank you. So we can have that video now.
Nation bustling with potential, where opportunity and innovation converge. And it gives us great pride to be a part of this dynamic narrative. Working with our partners and other stakeholders, we've spearheaded Nigeria's digital evolution, pioneering from 3G and 4G to proudly being the first to introduce a 5G network in Nigeria. Our 5G network spans all 6 geopolitical zones, with over 800 active sites offering unparalleled connectivity to millions, sparking growth and shaping futures. Our commitment to connectivity doesn't stop there. We've extended our broadband services to over 89.6% of the population, fueling innovation and fostering digital inclusivity. We've also partnered with governments and organizations to extend telecommunications coverage to millions of Nigerians living in underserved and unserved communities nationwide through our rural telephony program. In the dynamic fintech space, our user base is 14.9 million strong and growing, with 3.6 million active wallets served by an expansive network of over 229,000 Momo agents and 197,000 merchants. Working with partners that share our vision for a sustainable future, we've initiated Project Zero, employing the latest eco-friendly technologies to reach our ambitious net zero target. As a responsible corporate citizen, we've contributed over 4.7 trillion naira in taxes, earning recognition from the Federal Inland Revenue Service as one of Nigeria's most compliant taxpayers. Our investments go beyond technology. Through the MTN Foundation and in collaboration with local communities and public and private institutions, we have invested over 26.4 billion naira into national priorities in health and education, empowering youth, uplifting communities, and supporting national development goals. This is MTN Nigeria, a story of innovation, shared value, and progress.
Your Excellencies, distinguished ladies and gentlemen, when His Excellency the President of Nigeria, His Excellency Bola Ahmed Tinubu, took power, one of the comments he made was that we will hit the ground running. It has one minister in the Federal Executive Council who has hit the ground running. Is the man that is speaking to us now. One of his classic comments was when he said, our goal is to enhance the participation of Nigeria in the global technology trade over the next 4 years. In 2016, he spearheaded the visit of Mark Zuckerberg to Nigeria. He is the co-founder and CEO of Co-Creation Hub, a technology innovation center that provides cushion nest for innovators and creative people. He has been named one of the 100 most influential people on the continent by New Africa magazine. We're very happy that he's here. Some people say he is the poster boy of the Federal Executive Council. Please welcome here Dr. Bosun Tijani.
Thank you so much. Thank you, sir. Thank you. Thank you so much.
Thank you.
Good morning. I think before I start, I'd like to obviously give a very special recognition to our very stellar Royal Highness. It's good to have you in the room today. Good morning, sir. Also a very special recognition to a special man that we hold quite a lot when we talk about the development of our telecommunication sector, Dr. Ndekwe. Good morning to you. Also special recognition to senior government officials in the room today, other dignitaries, captain of industries, of course our special guests from far and wide, and I think most importantly, our special host, MTN. I think we have to recognize MTN. And I thought the best way to start my talk today is actually with the appreciation of the role that MTN has played in our economy. If we are to talk about capital markets and the role of capital markets in nation building, I don't think there's any other company that you can use as an example of how you develop a society that is much more than MTN. For those of us, of course, for those of us who were just coming out of university, when the full liberalization of our telecommunications sector happened, I still remember the excitement, amongst my peers to get our first SIM card. I think we paid about 21,000 naira or so for the first SIM card that we got back then. We were really excited. We gathered our money together. We bought the cheapest Nokia that we could afford. But it was something significant to us to have a mobile phone, because that was the first time we were being fully connected. Of course, I was part of the generation at university that accessed the internet through, for those who understand, the dial-up system, where we go to cyber cafe and we have to be about 30 naira per second or so, or maybe 1 minute, I can't remember, to access the internet. So when MTN came in, and of course all the other telecommunications companies, the MNOs and the entire value chain, it was a major development for us because we were extremely excited about the opportunity to be able to connect to people all over the country. For those who were studying, I was studying in Jos, so the ability to be able to call my parents who were in Abeokuta was a very special thing for myself then. Of course, the story is different today. We've all seen what the capital market through investment in companies like MTN can do to a society. Not only is this sector now responsible for driving significant progress and productivity in our economy, for those who are following, we contributed over 18% to the GDP of the nation last quarter, which is quite significant for just one sector. But I think that's it's the tiny part of the story. If you look at what connectivity and the investment in the entire court is done to the Nigerian economy, whether it's our ability to trade easily, the ability to connect people, or the ability to even reimagine how education is done today because we have technology, the ability to connect teachers to parents, or the ability to connect to medical services. I think this sector is done significantly to uplifting the nation and showing what is possible when markets are liberalized and investors are allowed to come in. Of course, while we can financially articulate the contribution of the sector, one thing that is part of my mandate today is to actually be able to calculate the total factor productivity of the Nigerian economy and be able to isolate what the technology sector is contributing to driving productivity beyond what we already calculate from labor and capital. We think if we're able to find this number, it will become apparent that the sector and the players in it are a key driver of the progress that we seek as a nation. And this is something that we're going to prioritize over the next couple of years so that we can articulate it better, we can have a clear understanding. My personal belief is that for us to be able to drive policies that can actually allow the capital market to support development, that the impact of the capital market engagement needs to be done factually. And the impact of the capital market engagement is beyond just how much money is made and how much taxes that people pay. The quality of lives of our people is also tied to a lot of this investment. It's one thing to look at the GDP numbers, but we all know that GDP numbers doesn't really speak to better quality of life for people. So being able to calculate the impact of this investment, I think, is the best way forward for us to have policies that are inclusive enough, that are pro-business, but also can help society. And it is important for us to understand that we must mainstream and continue to highlight the progress that we've made from the investment in this sector. When I was appointed, the first thing I did was to actually look at the GDP numbers of Nigeria. So I went with my team to CBN database, and we downloaded the GDP numbers probably for the last 25 years. Of course, we found that the top 3 sectors that is used to compute our GDP is based on agriculture, manufacturing, and services. But that doesn't tell the real story. You can look at it at the top, and you see how much each of these sectors are contributing. We decided to look at the sectorial activities under each sector. So we found that in agriculture, there are 4 main activities that contribute to our GDP. So one is crop production, the other is livestock, the third is fishery, and the fourth is forestry. But again, that doesn't tell us the full story. So we looked at the numbers. We were trying to understand the level of contribution of each of these sectoral activities. Then we found that over the years, the only thing that has been growing in agriculture in Nigeria is crop production. Fishery has been flat. Livestock has been flat. Forestry has been flat. The implication of that, when you look at a country like Nigeria with a significant body of water, is that we end up importing a lot of seafood when actually we should be feeding the world and not importing. But we found that the level of investment in fishery in Nigeria is not being what it should be. When you look at the total factor productivity in that sectorial activities as well, you will find extremely low application of technology and innovation. There's literally nothing serious going on there in terms of what technology can do. But when you go to countries as small as Togo, and you find how sophisticated the fishermen are in Togo, and how fishery is contributing to the Togolese economy because there's been intention to actually grow that market. It's exactly the same thing if you choose to look at services. Of course, services, we are categorized as part of services, where telecommunications or ICT is the major contributor to services when it comes to the GDP number. Again, when you break down the sectorial activities under services, you will find over 30 sectorial activities that has been flat over the years. Clear flat over the years. So people are focused on where the low-hanging fruits are, where you can find opportunity. Only about 2 areas contribute to GDP significantly, and it's been growing in Nigeria. Again, this is a sector that has significant opportunity to have value to the country. When you look at our population and the projected growth of our population, when you look at the demography within that population as well, with over 60% being young people under the age of 25. So you can imagine the opportunity that we can actually open up to the economy, but also opportunity for investors to actually capture value. We've seen the amount of value that the country has made possible within the telecommunications space. And this same performance is possible whether it's in agriculture or in services. And if you go into manufacturing, it's even a lot more deeper. Because in manufacturing as well, I think the subsectorial activities there is almost 100 different activities that the nation can actually leverage to create value. But again, the only bit that is growing is about 5 or so. The rest has been flat. The rest has been flat. And I think one recognition is the fact that for this to change, while government can come up with policies and taxes that can help, coming from the innovation space, I'm a big believer in the fact that government is not well placed to actually recognize and understand the most progressive taxes and policies to help open up economy. Because our world is moving at a fast pace, that what we consider today to be the ideal policy may actually be inhibiting the progress that we need to see in society. 2 years ago, little was being said about artificial intelligence. Today, because of generative AI, the role of artificial intelligence in the future that we're trying to build is becoming more obvious. But even today, in many countries in Africa, only a few countries are taking into consideration how AI is going to disrupt society and disrupt economy, and the implication of that for taxes, but also perhaps for how we build economies. We've seen what cryptocurrency did. Not so many people were able to project the sort of disruptive nature of the blockchain technology. So government took a position of pushing back as against actually opening up and trying to study and understand. And the case I'm making is that the best way for policies to work is for the private sector and the investors to be willing to build with government. For the private sector and the investors to understand that while government may be interested in opening up, government will never learn if you don't come and be part of building their economy. There's so much, and Dr. Ndupe can probably attest to this, there's so much as a nation that we've learned from just opening up the telecommunications space, from engaging with both local and foreign investors. And the role of government is to listen. And by listening, we can come up with better ways of ensuring that policies actually work. Which is why for those that might have seen my blueprint, one thing I'm illustrating is the use of sandboxes. And the role of a sandbox is the opportunity for us to allow people to prototype. And as people prototype, as they come up with new ideas in a very controlled environment, not only will these help us to change policies, but it will also help us to understand how to come up with forward-looking policies that we can claim has anti-fragility within it. Because our world is moving at a pace that we all can't recognize. And to wrap up, I'm not going to stay and talk for long. I think for those who have been following this current government, for those who have been following our president, when he came into office, it took very difficult decisions that we've never been able to take as a nation, and most of us understand that we must take those decisions. And these are very difficult decisions for politicians, and it's not unique to Nigeria. If you follow the story of Brazil, it's a decision that was difficult for them to take. Right? It's not a decision that you can actually take easily, but it's the decision that opened up the market and let investors understand that the nation is ready for business. And that's the body language of Mr. President. He is extremely pro-business. At every FEC meeting, his mandate is to ensure that the ministers understand that our role is to support businesses to come into Nigeria, to support investors to bring their investment into Nigeria, but also to support local companies to be able to do business easily in Nigeria. And not only is it mainstreaming the idea of inviting investors to come, it also makes it clear on a daily basis that it's our role to also allow people to be able to take their money out when they need to. This is something he says every day, given the opportunity. And this is the body language of this government, that our role is to listen. We want to listen more. We want to collaborate with the private sector. We want to collaborate with the capital markets to understand what we need to be doing to allow you to come into our nation and do business. Because we understand that when you come in and do business, not only do you create opportunities for yourself, but you actually help deepen our economy. And one of the biggest mandates for Nigeria is economic complexity. How do we ensure that economy is deep enough to allow services to happen, to allow products to be built, to allow opportunities for young people to come up with innovative ideas that can solve significant problems in our society. And we do have a lot of those problems to solve. So when we talk, Nigeria is a nation that is not a nation that is full of problems. Nigeria is a nation that is full of opportunity, waiting for investors who actually understand how to help open it up. And that's where we are today. And the role of this government is to make sure that those who are willing to build with us, again, build is a language, is a word that the president uses often. Those who are willing to build with us, that we can support them to do so. Because the nation that we desire can only happen when we build. Thank you very much for listening.
Thank you very much. Thank you, Honorable Minister. Let's put our hands together one more time to this Honorable Minister. The room is filled up with technology people. Former Executive Vice Chairman of NCC is here seated. And so I'm very sure a lot of you are ready to take him on for the next 15 minutes. Please. Yeah. Thank you. So the floor is open. We can begin to fire the questions now. Even Mr. Taiwo, you really can fire questions about how technology affects what you do. So the floor is open. I can see some people rubbing their heads and thinking, should I or should I not? The man has spoken eloquently well. Should I just not trouble him? Do we have somebody now?
Yep.
Okay,
Hello?
please
Hello?
do.
Hello? Okay, good morning.
Go ahead, sir.
And thank you, Dr. Tijani, for your presentation. My name is Soji Sholanke, and Head of Fintech Investment Banking for ABSA Group. So my question is, given your remit, and obviously you know very much about how technology companies in Nigeria raise capital, a significant portion of that tends to be raised in foreign currency. So it'd be good to get a sense from you, given the impact of an ongoing devaluation on the growth rates and the ability of these high growth companies to actually deliver returns, what can be done to actually localize capital raising by high growth Nigerian tech companies? Yep, given the foreign currency dynamics in the country. Thank you.
Okay, last question. There are a few hands up in the audience. Look around you.
Thank you. My name is Prince from All-Weather Capital in South Africa. I've got a few questions around regulation, which I believe has been part of the issues that the telcos industry in this country has been facing. But then, to cut the long story short, maybe I should ask this one with regards to the risk of further regulatory pressure in the telcos industry, and which I'd say areas in telcos are still vulnerable. Thank you.
Okay, thank you. If we can get one more, we'll shift attention to the Honorable Minister. Okay, so Mr. Taiwo, you is in front here. Are you the one raising your hand or the man behind you? Okay, yeah, the man behind you. Thank you.
Sorry, Vessel from Oyster Catcher Investments in South Africa. I've got a question. You kind of mentioned that the telco sector is very important to kind of drive inclusion and so on. And with investment being done in foreign currency and the telco sector having very little power as to pricing with inflation running quite high, how do you kind of balance how much you allow them to kind of give price increases? Or how do you, what's your thinking?
Sir, he's not getting you.
Sorry.
He needs to hear you clearly.
Okay.
All right, please.
How do you think, what are your thoughts around price increasing in the current high inflationary environment with kind of foreign capital investment needed to keep the quality of the telco sector services up?
Did you get that? All right, so back to you.
Fantastic. Thank you so much for the three questions. First one is what I'm passionate about, and there are two sides to the answers you get from me, or the answer you get from me. There's the one side, which is the patriotic Bosun, which has been a champion of the role of technology in development, and the understanding that there's absolutely no nation that can develop today without prioritizing technology. And if that's the state, it means that sovereignty of nations as well will be tied to technology. That's just the fact. So there's a part of me that has a strong belief that we do have to localize investment in our technology companies, and not just localize it because it's important to localize. I think we also have to encourage local domiciliation. Coming from the startup space, the bulk of the companies in Nigeria that we claim to be Nigerian companies are not Nigerian companies. I know Mr. Oyedele was talking about the idea of people employing locally. I think the startups actually know how to deal with that issue. They deal with it really well by setting up a separate entity which they use to hire. But the main entity is in Delaware. And there are so many reasons for why this has been happening for years. But there are also examples of countries all over the world that understand that there's no way you build a nation when your companies are nowhere near being domiciled in your market. Absolutely no way you build a nation. That's the fact that investors may not even like to. But I don't even think investors have issues with it. I think investors just want an environment to be able to bring their money in and take it out as well. So it's important for us to mainstream the availability of capital locally that can go into companies as a way of encouraging local domiciliation. Because we do not want to build a fintech company that is critical to our economy, that is doing extremely well, that is being powered by the Nigerian market to become a unicorn. But alas, this company is an American company. And all we get from the company is just payee. It's not sufficient. I think it's not just about taxes. If you truly want to deepen an economy, you also have to ensure some local ownership of critical infrastructure. And we know that technology companies are becoming critical infrastructure. What's going to be our future in 10, 15 years' time if all the companies running our technology backbone are American companies? And all we get is payee just because we want to create jobs. There's some nuances around it, especially in the startup ecosystem, that is very delicate, not just for Nigeria, for the entire African continent. It's the same with Europe as well. Europe is struggling with the same as well, where traditionally most of their startups would prefer to be American companies and based in Delaware. And I think the way to address this issue is to truly understand from the capital market, what do we need to be doing as a nation to allow for local domiciliation? That's the first step. I think once we crack that, you will see more flows that are based locally. And by encouraging local domiciliation, you're going to see more participation from local investors as well. It's been happening over the last 5-10 years. I think MTN is a success story in terms of how many local investors are part of that business. But I think we need to see more in most technology startups, and we're not seeing it. And it's part of the example that I gave. The easiest way out is to say the environment is not conducive. I'm going to go to Delaware. But until we actually take a decision to start to domicile locally, government will not have a clear understanding of what investors must see to bring their money into a company that is domiciled in Nigeria. Singapore is done it really well, where most of the large VC companies are also based there. As small as the country is, their companies are domiciled locally, and I think Nigeria can do it as well. We can use that to manage the raising of capital, the challenge you mentioned earlier. To the number 2 question on regulatory pressure, again, my answer to this one is not a popular one. I think historically, because the telecommunications space almost became the second oil for Nigeria, in a way, the interest in the sector became extremely deep, whether it's from the private sector in terms of the opportunity to generate gains and values from it, or even from actors within government who sees it as a go-to for taxes, as a go-to for raising money. Right? It became so clear that there's so much in this sector. And you know what that can cost regulation as well, because regulation in itself is not coming from an entity that is not human, that is called government. Every government activity in Nigeria is driven by people. The Nigerian government is well connected to the private sector. This is the first thing I've learned after becoming a minister. That is hardly a minister that is taking a decision in isolation. Absolutely nobody in Nigeria. The Nigerian government is very pro-business. The private sector has a good hang of Abuja. There's no reality anywhere in Nigeria where a minister can run without the Nigerian private sector. Absolutely not possible. So when it comes to regulation, the mandate is that we all need to accept that this is a critical sector for the nation. It's the backbone for the future we're trying to build. And for it to meet the standard that we can actually gain the confidence of the capital market, both government and private sector must take governance seriously. That people have to adhere to the laws and the rules and the regulations. We have to model the things we want to see. Even the private sector must model what they want to see. As we model this, governments as well must model the same way, which is my mandate as a minister, as the mandate of the EVC of NCC as well, to ensure that things are done properly. And when things are done properly, we can gain the confidence of the capital market, and as a sector, we can continue to grow. And lastly, on price increase, very sensitive conversation. For those who are active on social media, you see that I've been shaking properly in the last couple of days, because of some comments. But this is a sensitive conversation in the sense that we do understand the comments and the pain that the sector is pushing forward on this matter. But at the same time, we're not oblivious to the fact that we are at a difficult time in our country. Our ordinary people are going through pains. Cost of living is quite high. And the telcos will tell you, the MNOs will tell you that a lot of our people will buy and pay for data or credit before buying food, which means this is a critical service to them. So in taking the decision that actually allow the businesses to continue to function appropriately, we also have to balance that with the mood of the nation. So there's a need for us to collectively understand how this is going to be done in a manner that doesn't put the businesses at risk, but also done in a way that supports society to continue to exist and also benefit from this backbone, which is a critical backbone for anyone living in the world anywhere today, including Nigeria. Thank you.
Okay, thank you very much. Let's appreciate him. Honorable Minister, we are very grateful to have you around us. Thank you very much. Let's welcome you with a very warm round of applause. Thank you. Thank you very much. Who have the photographs? The same set of people, the Honorable Minister, His Highness, the 14th Emir of Kano, the Chairman of MTN. Okay, all right, thank you. All right. Okay. In a few seconds, we will be listening to the CEO of MTN Nigeria, but we'll have a video. Can we have the video now to signal the start of his presentation?
This is the MTN story of innovation in Nigeria. Guided by our Ambition 2025 strategy, we continue to partner with relevant platforms and institutions, leveraging our profile as the most trusted and valued brand in Africa. In localizing this strategy, we are driving digital and financial inclusion as embodied in the core priorities of Ambition 2025. We are excited to be the first telco to roll out 5G in Nigeria with over 800 sites and counting, and to have grown to about 500,000 Momo agents and merchants spanning Nigeria. We are committed to ensuring that we provide through these platforms all the access at the fingertips of every Nigerian. Because we truly believe that everyone deserves the benefits of a modern connected life.
And so, distinguished ladies and gentlemen, please allow me to welcome here the CEO of MTN Nigeria, Mr. Carl Olutoku Toriola.
Yellow? We need a bit of energy. Espressos or something. Yellow, everyone? Thank you. Good morning, everyone. Welcome once again to the Capital Markets Day. Your Royal Highness, thank you for gracing us once again. Massive thanks to the Honorable Minister for coming to speak so eloquently. My brother Taiwo Oyedele. I mean, the message, the crispness with which you deliver the message is incredible and gives a lot of confidence to the private sector around the intentions and direction of the policy of MTN Nigeria. I'll give my introductory presentation to the audience. I'm going to try to be careful not to steal the thunder of my team, who really delivered the message in a lot more granularity, but I'd like to tease out a few points in going through this. We are very excited. Trying to move my presentation forward. Maybe take me to the text slide, the first slide of my content. We're very excited about where we are in Nigeria today because we're at the cusp of change. And I think the messages that you've heard delivered from the government officials has really showed that the policy direction of the business is actually, of the country, is looking in a very positive direction. We're already Africa's largest economy and projected to be one of the top 10 economies in the world by 2050 if we get the policy direction right. And the digital economy, as Dr. Tijani spoke to, is going to be a critical driver of our growth in the country today. Our IGDP today starts at 6%, projected to grow to 7 to 12% of GDP by 2050 on top of a growing GDP. And we are the 6th largest population globally, with 220 million people, and we will be, by 2050, probably the 3rd largest country in the world. We have one of the youngest populations in the world, with a median age of 19. And we are the biggest telecoms market in Africa, with 220 million subscribers and 47% unique mobile penetration growth. We continue to expect growth in the base, in the subscriber base of this market, and it's one of the few markets that offers this. In fact, we're actually one of the few markets that offers not just a continued growth in the foundation of our business, which is voice, but very fast growth in the major growth trajectory today of data. And on top of that, you layer the massive potential that we see in fintech and digital services and home broadband, fixed broadband solutions. It actually offers a significant trajectory in terms of growth on a long-term sustained basis for the next few years. Mobile data is driving the majority of our growth. We're over 40% in terms of revenue growth, more than that in traffic growth. And we see that continue to be driven by a few things. One, consumption of our subscribers is increasing. Two, smartphone penetration is still at relatively low base, projected to go to 74% from about 54% in 2027. And then, of course, a very fast-growing fintech ecosystem. And then we have a thriving entertainment media startup industry. Next slide, please. Is there a way to lift the presentation a bit higher up in the projection? Because there's some points at the bottom which are not showing up there. If the tech people can do that. We're definitely in a difficult macro time. Thank you. We're definitely in a difficult macro time, but we've been through these cycles before. And yes, devaluation of our currency does impact our margins, but if you look at the cycles of MTN Nigeria, devaluations that have happened, we've had devaluations from 200 Naira to 386 Naira. Each time that happens, a year or two later, MTN Nigeria has managed to once again take our margins back to the historical base that they were. So we've seen this cycle a few times, cycle driven by global macroeconomic and geopolitical volatilities, rising energy costs, food inflation, and of course our peculiar and significant exchange rate volatility. Why are we optimistic? As I've said, we've gone through this before, 2016, 2020, and we came out stronger, and I'll show you in the next chart what has happened to our margins over this time. There's a very strong and clear commitment from the leadership of the country, represented in person here, speaking to the capital markets today, in terms of the policy direction and the critical expected contribution by the private sector towards the economy, and creating a business-friendly environment through the taxation and fiscal policies. There's a commitment, clearly made commitment, it's been restated in many, many forums, including yesterday, that the historical backlogs of forex liquidity is going to be honored. And they are being progressively honored. About 2 weeks ago, some funds were released to the international banks. Towards the end of last week, additional funds were released to local banks for outstanding forex obligation at the historical rates. The news on that will become clear. And then, of course, we are looking at optimistically and hopefully towards reforms in the oil and gas sector to drive production and ensure the security of output production. Next slide, please. So this shows you, and there's an exception maybe somewhere here around the time of the fine where our EBITDA margins drop very low. The historical 60% margins are associated with when we were primarily a voice-driven revenue base. But every time we've had a devaluation, such as here, we've seen, there was a devaluation here as well, we've seen that the EBITDA margins do recover back. And Modupe will talk to the drivers of the recovery of our margins, top-line growth, efficiency, etc., etc. So the message here is every time there's a devaluation and there's a table at the bottom, a year, 2 years later, EBITDA margins recover. Yes, we do take a hit on a short-term basis, but EBITDA margins recover. Next slide, please. Why are we optimistic? Well, there's a number of reasons for that. One of them is comparative to maybe 4 or 5 years ago, we're in an exceptionally strong competitive position. 4 or 5 years ago, we were growing 13 to 16%, below the growth rate, maybe half the growth rate of our most significant competitors. Today, we are growing at the same pace as our competitors, in a lot of instances at a slightly higher rate. And on the primary driver of revenue growth, which is data, we're growing at a much higher rate than our competitors. So we're in a very strong competitive position. We're one of the, no, keep it on that slide, please. We're one of the very few markets in the world today where we continue to see voice revenue growth. Double-digit voice revenue growth if you look at the performance year to date. We're capturing the largest share of the data revenue growth in this market. We have a strong leadership position in technology terms. We've taken the lead in 5G. We have coverage advantage on 5G that is multiple times superior to that of the closest competition. And I think most of your networks that you roaming in towards on MTN Nigeria will have experienced our 5G. This morning I tested in this hall, of course before we had a lot of people in, and I got 1.2 gigabits per second, but I've been consistently achieving 500-600 megabits per second in this hall. And it's not that we have a special solution for this event, it's the same solution that we use in the Hilton at any point in time. So we're the first mover on 5G. We have undertaken a sales and distribution transformation which used to be our Achilles heel. It will be completed by the end of this year. We're going to have very efficient sales and distribution, capillarity in the sales and distribution, which is going to help our mobile money business. But back to why it's exciting, we're going on voice, we're going in significantly on data, and we're just starting the journey around fintech. And you can see the sustained growth of data. Data traffic continues to grow at an incredible pace. A lot of people thought this was a COVID phenomenon. On the contrary, post-COVID, digitization of the economy is continuing to accelerate. And you can see data usage per subscriber has gone up multiple folds over the last few years as smartphone penetration continues to rise. We're at 53% smartphone penetration, projected to go to 74%. If the economy and the GDP growth will grow at a faster pace, we'll be approaching the likes of other countries which are close to 90%. So a lot of people are going to come into the data space, and the existing base are going to use a lot more volumes of data. So that's a key driver of growth. We're just at the beginning of our fintech story. Ellie will speak to you. 97% of transactions in Nigeria are done on a cash basis. Eventually, that's all going to be converted to digital currency. And that's an exceptional opportunity in terms of transaction volumes. There was a dip as a result of the cash crisis and the excessive load on the financial electronic systems. So we did see a dip at the beginning of this year, but we expect this curve to grow at a much faster trajectory. Next slide, please. So just to recap of our Ambition 2025, I won't dwell on the next slide too long. We're building the largest and most valuable platforms on the base of our industry-leading connectivity operations. We continue to create shared value across all the ecosystems and the environments in which we operate, and we're accelerating our portfolio transformation. Next slide. So how are we going to deliver all of this? With voice, we're ramping up our gross connections with our revamped sales and distribution. We're revamping our voice proposition. I think the regulators and the Honorable Minister, the policymakers understand that the sustainability of the industry is critical. And while our utopia, which we're working towards, is a raise in the price floor and an ability to adjust prices within the industry on our own, not having to go back for every single price packages, there is some flexibility in the current pricing structures that we have. We have flexibility to reduce bonuses. We have some packages which we're adjusting on an ongoing basis with full regulatory approval, and we're using to optimize our effective rate per minute and our yield of our packages and bundles. We continue to drive our rural penetration, and our sales and distribution is effectively, by the end of this year, completely digitized. Our data is being driven by sustained increase in data traffic, driven by demand from customers, rising smartphone penetration, and quite aggressive expansion of our 4G and 5G coverage. On Own the Home, I'm very excited about Own the Home. I think this is almost virgin territory. The largest fiber to the home operator today has 67,000 homes passed. We think this is virgin territory, which is important for us to capture from a value creation perspective for a multitude of reasons. One, there's a lot of demand in that space. And we are one of the few companies that have the capacity to actually invest on a sustained basis and drive fiber to the X. The largest competitor, 67,000 homes passed. If we only spend 3-4% of our capital expenditure focusing on this space, we think there's, in the long term, 40 million homes to be connected. And we're using very skilled tools, using geospatial analysis, movement of people, traffic existing on our 5G, 4G, 5G networks to select the locations that we're focusing on. And in the best examples, Hassan will tell you, we're getting as much as a 75% home passed to homes connected ratio, which delivers incredible returns. Generally, once you're above 25%, you have good returns on the fiber to the X space. In our new rollout, we're getting somewhere around 50% ratio of home passed to homes connected. So successful targeted deployment of fiber to the X, one. Two, really quite an empty competitive space because of the capital requirements. Three, we have a balance sheet and an income statement that can support the drive into that space much better than any of the competition, and we're learning very smartly how to do that. Ellie is one of the most important speakers in this space, so I don't want to steal his thunder. Serene is here, Group Fintech Head. He's going to speak to you extensively about what we intend to do and how we intend to drive our Fintech business. We understand clearly the problem that we're solving for customers in this market. We have created the governance structures, put the systems in place to focus and accelerate, and we'll be delivering on that space. We're excited about it. I think we've gotten all the heavy lifting behind us. We're now focusing on execution. Digital Nigeria is an exceptional country that offers so many opportunities, and it exported a lot of countries, a lot of content across the world. So we're focusing on gaming, OTT video, digital advertising, music and audio, e-health, focusing on local content, but also we're quite advanced in some of the most advanced partnerships you see in Africa with the likes of Apple, etc. And enterprise is a space that we don't talk about extensively, but the growth in enterprise is somewhere between 30 and 40% every year. So it's actually over-indexing our total growth. So we're doing really well in that space. We've continued to grow our market and value share in that space. Next slide, please. Quickly, on our Ambition 2025, we're about halfway on the Ayoba mobile users. This is, of course, the number that's going to be most interesting to all the investors here. We're heading towards 30 to 40 million Momo users. Some work to be done there, but we've got the basics in place. Our active Momo agents, really good trajectory. forward indicator of where the mobile money business is going. Active data users, we're very comfortable. I think we're very comfortable in that space. 43 million, we're projecting another 7 to 17 million in the next 2 years or so. Home broadband, we're actually ahead of our targets on the home broadband. At this point in time, primarily driven by 5G. 5G has been actually a positive surprise in terms of relative to when we launched, the quantity of traffic that we're carrying on 5G. Quite impressive. We're carrying the range of 27-28% of our traffic on 5G on sites where we have 5G co-located. And that is actually rising. So very successful. We're number one in NPS overall, and also number one in network NPS with a double-digit lead in NPS, so very satisfactory. ESG ratings, primary focus area, we're already in top quartile. We're ahead of our target on reputation index, and localization of MTN Nigeria will proceed as the economic conditions are ready for that. And then we're proceeding with the structural separation of our businesses. Next slide, please. So creating shared value, well on track. Mohammed Rufai, our CTO, who has that in his targets, well on track in terms of our net zero emissions by 2040. We're actually slightly ahead of our targets. We use multiplicity of levers. Even within our offices, we ensure that our power systems, our lighting systems are sensor controlled. We're focusing on our water usage. We've connected it to independent power plants to drive our switching centers. In terms of digital inclusion, we're at 90% broadband penetration. Financial inclusion is a big space where we want to focus on. We've paid to the government since inception 4.2 trillion in taxes, actually more than we've paid in dividends. We hope that will reverse over time. And through our foundation, we've invested over 26 billion and touched every single local government in Nigeria and close to 18 million people in terms of the impact of our foundation. Next slide, please. We're an enabler of our socioeconomic development. We are a carrier of carriers. So somewhat the entire technology space and the telco space in some way or the other relies on us. We carry over 100 ISPs and ICT resellers. We connect a lot of government institutions. We provide network infrastructure to support the financial services industry with over 12 billion transactions passing through our internet and USSD. And we've committed to the refurbishment of Enugu-Onitsha Expressway. That project has started. It had a slight pause, but we're restarting now. So that will be done under the RITC scheme. We create in Nigeria, and this is to some extent why we have a voice on the table, through directly and indirectly over 2 million jobs. As Temiso spoke so eloquently about, we're the first digital offer with over 139,000 direct shareholders in MTN Nigeria, and we've spoken about our foundation and our partnership with the Nigerian Football Federation, football being the all-important sport in Nigeria, and now with Nigerian athletics. Next slide, please. Just a few of our awards and recognitions. We were awarded by the FIRS, the Inland Revenue Service, one of the most tax-compliant companies in Nigeria. One of the top tax-paying companies in Nigeria. We're the most compliant company on the Nigerian Stock Exchange, as awarded by the NGX. Best company in financial reporting, listed company of the year, largest commercial papers. Modupe will speak to the rates at which our long-term debts are, and that is how that is actually below the sovereign borrowing rate. And a host of other awards in brands, finance, etc., etc. Next slide. So looking ahead, what do we have to look forward to? We remain the leading mobile operator and provider of telecommunication services. And we are going to protect our market share. We have a very effective sales and distribution now. It was somewhat our Achilles heel. We brought in Shino to fix that. He's advanced very well, fully digitized. We have a significant lead on 5G. We will maintain that lead and continue to be the leading technology company in Nigeria. We have a strong competitive advantage over every segment of our business, and we're well positioned for the long term. Our focus on fiber to the X, fiber to the home, is built on the platform that we have the widest fiber network in Nigeria. And we're focusing on that on the home rigorously. The demographics are extremely exciting. Largest telco market, it's big. Nigeria scales in everything that it does. fast-growing youthful population, and still relatively low internet penetration or low smartphone penetration, even though now our data revenue is starting to exceed voice revenue. And remember, voice revenue is still growing. And we have an attractive return profile with double-digit revenue growth. We captured the largest share of data revenue, strong cash flow generation, consistent dividend payments, and very, very moderate leverage, as Mutuba will speak to. And all of this is anchored around a disciplined capital allocation, very strict governance, enhanced risk and regulatory framework, and a commitment to create shared value with our stakeholders in the economy and the country. Key takeaway points, next slide, please. We remain committed to our Ambition 2025 strategy. It's a bit of a repetition of the previous slide. We will capture growth opportunities presented by sustained higher demand for data. We'll focus on Own the Home. This is going to be a significant opportunity for us because over time, more people are getting connected, getting educated, health, etc. in the home, and some traffic will eventually migrate from mobile to the home, but that's still a long way out. We drive growth of active mobile Momo wallets and the Fintech ecosystem. I don't want to speak too much on that because Eddie has a very granular presentation on it. We continue to focus on our expense efficiencies and disciplined capital allocation, and Ambition 2025 delivery is underpinned by a very strong management team and a very healthy culture, a culture of collaboration, openness, and transparency, and everyone has a word to say. So that's my presentation, but before I wrap up, I want to proactively address a few issues which might come up before the question and answer sessions. The first one is there's been a lot of talk around the tax matter. Is Nigeria, MTN Nigeria, do we have a strained relationship with authorities, etc., etc.? And I think that's somewhat exaggerated, and I'll tell you why. This 47 million tax administrative tribunal matter, first of all, started as a $2 billion issue, $800 million of customs and $1.28 million of tax issues. After rigorous assessment by the FIRS, we were eventually given a bill of $135 million odd, which we contested, and it brought it down effectively to an amount which is still disputed. So we've gone from $2 billion to $47 million. That's one. The second thing is the administration has been very, very clear. And if the executive chairman of the FIRS was in the country, he would have been here himself. They are not going to do anything that's going to cause consternation to investors. This is a process which we go through, and these taxes are relating to the period 2007 to 2017, historical issues. So, great relationship, we're compliant, we're respected by the authorities. We have the chairman of the Presidential Committee on Fiscal and Tax Reform here to speak to us on that. But those things have to wash out with time. That's the first thing I wanted to mention. And I think I'd like to reaffirm that we believe through our humility, through our stakeholder engagement, we have a very strong relationship with this government. And we'll continue to reinforce that. I've always said stakeholder relationships are like riding a bicycle up a hill. The minute you stop putting effort into it, you slide backwards. So we spend an inordinate amount of time with our stakeholders in Abuja. In the last 3 weeks, I've been to Abuja 7 times from Lagos to engage with various stakeholders. So we think we have a great relationship. We'll have a few arguments and a few disputes, but the quality of the key stakeholders in President Tinubu's cabinet is evidenced by the people who have spoken to us today. And they understand the private sector, they understand how it can drive the economy, and it's very well supported. Finally, there's been a few questions around the move of our portfolio away from IHS to another tower provider, and whether that was something which bore any risk for us. That decision went through a very rigorous assessment process, also a risk assessment process. And just to give you some frame and context, we're moving 2,500 sites. They're not new sites. A lot of these are in urban areas. You can simply figure out that if our closest competitor has similar coverage to us, they probably have towers in the similar locations. And so there's quite a number of towers out of the portfolio that we're moving that are already in existence. And with frequency planning the right tools, etc., a lot of those towers, I won't get down to specifics, I'll leave you to come to those assumptions, are already in existence with ATC and the spattering of other towerco providers. You can tell about this by knowing that Airtel, our competitor, has similar coverage to us. So that tells you that there's certainly enough infrastructure around the place to take the majority of those towers. There's another 1,500 towers which are expiring over the course of the next 2 years. We will go through the same rigorous process of evaluation and come to the right decision for MTN Nigeria. What are we looking for? We're looking for efficiency. We're looking for ways to continuously improve our margins. We're looking for ways to ensure that this growth of our tower expenditure is managed in line with the growth of the top line, and we'll always take the right decision for MTN Nigeria investors. So that's it. Thank you very much. I think there's a question and answer session. The main substance comes from the great gentlemen, Eli, Hassan, and Modukwe. And unfortunately, it really sounds bad. There's like 4 gentlemen presenting. But in the management team, executive management team of MTN Nigeria, I think we lead in MTN Group. I think there's a few Ghana, etc., who are as well as us. And in Nigeria, we're recognized as the most gender-balanced management team. So half of our management team, ladies, stand up. Half of our executive management team in MTN Nigeria are women. And we're very proud of that. Thank you.
So you'll be stepping down.
Oh, okay, that's good.
We thank you. He'll be back for the question and answer session after the CFO, Mr. Modukwe Kabir, has presented his paper. I invite you, sir.
Where's the clicker? All right, good morning, and thanks for joining us. I was wondering what I did when I was invited. There was no claps, but it's fine, it's fine, it's fine. It's maybe I'm a numbers person, maybe that's why. But now we're talking about the financial framework. I was told to point this direction. That's not working. I'm pointing this direction. That's working. So mine is a simple task. It's more or less to paint a picture of what happens to be a story of 2 halves. What happened before devaluation and what has happened after devaluation. And what's our outlook and how do we see all these dynamics playing out? I know there are a lot of questions up front. Hopefully, over the course of the next 10 minutes or so, I'll be able to address some of those concerns. So, key highlights, we're still above our service revenue guidance of at least 20%. So we're at 21.4 so far. As you could see also in terms of what Carl has amplified, in terms of our data strategy, you see our data growth going, our data revenue growing at 36.4, which is right about the right trajectory we wanted to have. Fintech, you hear from Eli shortly and the team, and the initiatives that they're putting in place. We're still growing, 5.6%. Like Carl also said earlier, voice is still growing, even in this market, so that's a good thing. And despite, or in spite of all the headwinds, we still recorded EBITDA growth of 16.3% as at 9 months. Now, we've seen a margin erosion by 2.4 percentage points. That's mainly because of the dynamics of the devaluation of the currency. As you know, we all had a massive devaluation, from 460 naira to 760 naira at the end of June, and that's about 68%. So what that does is that it affects the dollar-driven expenses that we have, and I'll unpack that in a second. So the profit before tax is down, mainly because of the unrealized gains or unrealized losses on exchange. Our capex intensity is still in line at 17%. And of course, more importantly for you investors, our free cash flows over $500 billion, $500 billion, which is a good thing. So that said, remember what's our financial framework? and this is how we bring to life Ambition 2025 in terms of, how we're making our money, in terms of free cash flows. So the first pillar is the service revenue growth, the margin expansion, and the value-based capital allocation. Now, based on what we've said previously, and some of the questions that were posed to the Honorable Minister a while ago, you could see the criticality of ensuring there's the right pricing in the industry to compensate for the additional costs. So, all said, even though at the moment we're still above growth, 20%, but actually do the average inflation for year to date, it's about 23%. So, our service revenue growth of 22% is still lagging slightly behind, and that's why that discussion on tariff increases or right pricing, as the Honorable Minister put it, is important. We'll take advantage of the growing consumer voice revenue because obviously they have higher gross margins, and that will also help cushion the effect. And of course, we're going to scale our platforms. So that's the first thing. Second thing is the margin expansion. Now, we've known that with our previous guidance, we did say that every 10% devaluation in Naira would probably affect our margin by 1.3 basis points. Now, if that has gone about sixfold, that's like easily about 9 to 10 percentage points. So, in the next slides, I'm going to talk about how we're going to unpack that to, restore that margin, or, what things we could do in that place. And of course, our value-based capital allocation framework, which we've talked about severally. So, that takes us to the next thing, to unpack the service revenue, what we need to do. Now, it's always a good thing that you can see that voice has declined from 66 or 67% to 47%, and data has ramped up from 24% or 25% to 42%. Now, Fintech, when they ramp up, digital and all these other things, all goes to that story. And of course, once we have the right pricing in the industry, in terms of optimizing our tariffs and making sure that we're getting value, then automatically that service revenue envelope is going to grow. And of course, through the share strategy, which has to do with, in terms of the handsets, affordability, and all those things that we put in there in our dual data strategy also to make sure that we're actually optimizing more from the consumer. All these things will all add to a strong and robust service revenue growth. Now, of course, once we fix the service revenue growth, at least to be in tandem or close to the inflation, automatically that will all flow through to the bottom line. So that's the first thing that we can talk in that regard. In terms of our expense profile, and that's where the elephant is in the room, in terms of why are you having all these spiraling costs, or what's happened to our cost profile? Well, it's a simple thing, it's a simple equation and nothing to be too worried about in terms of the construct and the context of that. So in terms of the OPEX, it's more like 66.5% of our total costs. As you can see, even before devaluation, even with the devaluation now as of September, it's just gone up by about 3 percentage points, about 3% in terms of the mix. Now, however, the real cost or the underlying thing driving that is really the leases, the tower rental cost. And if you look at it carefully, you will find out that the leases now account for about 58.8% of the total OPEX. Now, prior to that, prior to devaluation, at least it was about 55. So you've done a 3.4 movements. So if we go to the next slide, and this is about understanding our tower contracts, because oftentimes when you look at the narrative, when we release our quarterly results, you might be tempted to compare us with some other operators, but without understanding this slide, you might be making the wrong comparisons. So, what's the first point? Our site splits. Now, IHS, which is our major tower provider, accounts for about 80% of our tower sites. Now, that contract itself is what you call a technology-based contract, technology price-based contract. So it's different from a space and power model type of contract. So what that means is that once you have a technology upgrade, for instance, you pay for those technologies. So as we're rolling 5G out, for instance, we would be paying more, even though it's the same site. Now, of that, ATC currently has about 2.3 or 2,300 sites of that. CAD has spoken about the 2,500 sites that are moving out at the end of 2024 to ATC, and we are firmly committed on that. We're almost 100% confident that that is going to take place, no issues in terms of migration. So that's clearly out. And one of the reasons why we did that was that when you look at the technology-based pricing contract that we have, it's actually expensive. Same infrastructure, you're paying more for adding new technology. So we try to go through a process, procurement process, where we put out those sites on tender to get the best pricing. And one of the things we achieved with that was to actually remove technology pricing from that cost structure sites. So going forward, you'll see those savings coming on in the future. Now, despite moving those sites end of 2024 to the new service provider, IHS will still account for at least over 66% of the portfolio. So we still have this technology pricing issue thing to do. And of course, majority of the sites are going to expire in 2029. Now, here's the thing you need to note. Why is it that the impact of devaluation is much more on an MTN, as an example, than other operator? It's a very simple matter. Now, when IFRS 16 was implemented in 2019, the standards actually provides that you should separate your lease costs between, your rental costs between the lease component and the non-lease component. So basically, you are going to evaluate the portfolio based on what your service provider is giving you, and then you are going to split that cost into a lease component and a non-lease component. Now, at the time we implemented that, it was deemed that the lease component of our lease rentals at the time was 47% compared to the non-lease component. Now, which was 53%. So what that just means is that 53% of that cost is going to be expensed at your EBITDA level. And the balance, the lease component, is what you're going to calculate your, what they call a right of use asset, and you create a liability on your financial statement. So depending on what other operators did in that split, it will impact on, or to have an effect on how it impacts your EBITDA. In our own case, it's like I said, 57%. Now, for newer sites, or build-to-suit sites, or 4G, 5G upgrades, the split is actually even higher. In other words, the lease component of the 4G or 5G upgrade is at 34%, compared to the non-lease at 66%. So, in a nutshell, when you now look at the income statement, you're going to see that with the valuation and the rising cost of funds, because you have to impute a finance cost, on the bottom line is going to be the same operator. So foreign exchange operator. So foreign exchange, I'll take that as read. We've all said these things before. There are energy pass-through contracts, which just means that for the ATCs, inclusive contract, and there's the CPI escalations. So in terms of our strong margin EBITDA evolution, this is the picture of what it is. We see that we are currently at 51.2 in spite of the headwinds, and ahead of what we see in Q4. Carl has just talked about the tax tribunal, so we are obliged to fully provide for that in Q4. As at year-to-date September, if you were to have done that provision, that's probably roughly about 1.6 percentage points on the EBITDA, Obviously, by the time you have a full year EBITDA and you're applying that provision on it, probably it will end up at 1.2, 1.1. So that's one of the things. The tax on leases, I'm glad that's on to anybody, whereas it should be passed on to the consumer. So basically, we incur that as another additional burden, and that took place after the expiration of the presidential executive order that granted a 3-month stay of the Finance Act. So with all these things, in terms of what we see in Q4, we did give our guidance that during the investor call that we were saying about 47 to 49%. It's probably going to be at the higher end of the scale of that margin, to be honest, based on what we see at the moment. But of course, no Q4 numbers have been released, so I can't tell you more than that. But that's just the construct on what we need to do. So one of the things that we can do, that we're doing, we have our expense efficiency program. And this program is designed to optimize our cost. So even in spite of the strong headwinds, we've actually added 8.1 billion in the 9 months to date. In terms of the impact of forex liberalization, the major thing there is the forex impact. But the key thing there is it's an unrealized loss on exchange. Loss on exchange. Now, if you are to normalize it, you will see that the business is tending in the right direction, notwithstanding all the headwinds that we're facing. So, we continue to go to explore the mix of our local contracts to make sure that we have the right pricing to get the best out of it. In terms of our capital allocation, we are going to continue to optimize how we generate or roll out our capex. So, which is what this slide is talking to in terms of how do you maintain your capex envelope or capex guidance without to support the massive growth opportunities that exist out there. So what we're trying to do is that we look at different ways. One of the ways we do that is through our disciplined capital expenditure framework. As you can see, we've rolled out from coverage from 60%, all within our. So one of the things you should know is that there's always opportunity for data growth. And one of the things we have to focus on how best can we optimize our capex, doing more with less. And one of the things that we've done is to use spectrum as a means of delivering that capacity. So once you acquire new spectrum, like we did, or lease spectrum as the case would be, from MTEL, and acquired the 2.6 spectrum from Open Skies, what you will see is that you've been able up to over 269 billion, I think it was, or thereabouts, in terms of what it will cost us to build new sites. So we remain disciplined being local, and it's only 60% because of the devaluation of the foreign loans in that space. We're AAA rated, one of few companies in the market that's AAA rated. We continue to raise instruments in the market in short term below the sovereign, and that's also attests to the strength of our balance sheet. And more importantly, the fact that 51% of our loans are actually fixed, and they are fixed on a 7 to 10 year bonds at 12 to 13%. Now compare that to where inflation is. So it just tells you that in terms of the financial health of the balance sheet, we're in a good space. I'll take this. I won't necessarily okay, I need to dwell on a point on dividends. It's one of the questions that may come. So dividends is a function of the results for the year. We have a dividend policy clearly that says that we'll pay up to 80% of the retained earnings. So whatever that number is at the end of the year, losses on exchange, which also is going to affect your, and that would affect whatever or impact whatever decisions will be made. So, key takeaways. Good news is that we have a well-developed framework that supports our growth and ambition 2025 strategy. As management, we are upbeat. we've been here before. The headwinds notwithstanding, it's just business as usual as long as, and you can easily see that through the strong top line, robust growth that we have experienced, notwithstanding the headwinds. We will between leases and non-leases, and with that, I would wrap up, and thanks for your kind attention.
Thank you very much. Wonderful presentation. And while you are presenting, we want to say thank you to distinguished Senator Patrick Ndubeze, Chairman Senate Committee on Works, for being part of this. We appreciate you. Thank you very much. Thank you. Please. As I invite here the CEO, Mr. Carl Toriola, to take his seat, the man who just presented, Mr. Modupe Kadri, and the winners up here now. This session will be moderated by Lanre Bulero. Please, thank you very much. You're welcome.
Headset, please. Okay.
Okay, great. Good morning, everyone. I have the honor and the pleasure to moderate this panel. And given my role, I will be asking a series of questions, and we'll open the floor for questions. So, interesting presentations by Carl and Modupe thus far. Stellar performance year to date. Top line, EBITDA margins very strong.
The most now is accelerating fintech. It's not that it keeps me up at night, but for this organization, for a sense of self-satisfaction and achievement, the acceleration of fintech active wallets is the passion that we have more than anything else. We're a very competitive organization. We enjoy outperforming the market. That's difficult to do when you're 2.5 times the size, 2.2 times the size of the closest competitor, because your absolute growth is always such a huge quantum. But we're very passionate about our competitive position, not because it makes a difference, but it gives a sense of satisfaction. We use it as a motivation tool. Clearly, the market will a man who can raise debt in Naira lower than sovereign to give me comfort in that space. But I guess in a complex environment like ours, you're always scanning the horizon for everything possible. We are completely allergic to fines, which means compliance is non-negotiable. The word of a fine is a taboo in MTN Nigeria. You all know why. It relates back to a 2015 incident. But aside from that, and then most of all, the culture of the organization is very important to us.
Great, thanks. Good segue to Modupe. Yesterday was a lot of discussions on the macros. You do operate in an environment
like right pricing to make sure that we're able to at least get the returns to our shareholders. So if you look at, if you look at what Mr. Edile said earlier, if I were actually to go and plot on my taxes year on year, the government has made 47% of me, increase. It has made 47% of me, increase, whilst we're almost drowning, which tells you that there is a mismatch somewhere in there. So if you look at my PAT now, at 9 months, probably was 10 over 5%. It was 17%, same time last year. So there's something definitely fundamentally wrong with that equation. So what we can do is efficiency program in place. The whole idea is to see what areas can we use to optimize, or what other better ways can we use to achieve the same results. So if you look at things that our CTO is doing in the technology space, Spectrum, what he's doing with what he calls Those things are what helps, cushion the impact on that. In terms of borrowing, of course, we leverage on our balance sheet. We leverage on the fact that we're AAA rated. We leverage on the fact that we have excellent advisors. Like I'm not marketing for anybody, but this I can say, like Stanbic, IBTC, and Chapo, give them your good selves. So, and this helps, keep the market honest. Because I always remember, like, some people have
kudos to that, worth something, and kudos to that. So, we have we growing, but over the past 4 years, we haven't seen much of you. If you can help us, and Carl spoke about it, briefly about this, and see how, and let us know how you're managing this issue. I mean, you are a top 10 taxpayer. Carl talked about you paid more taxes than dividends. Why is this lingering issue?
I think the gentleman there, Mr. Ayodele, had spoken federal level. Not federal level, but where we have the most impactful taxes from a negative point of view are the subnational level, the states and the local governments. And let me explain why those are issues and why it keeps one awake on an ongoing basis. Now, if you have a challenge with the at the federal level, there's a clear process you can local government level where they come up with most of those taxes that he described as illegal. For example, telling you to pay emission control, or sometimes they tell you to pay for pest control, and they tell you that what they do is that they are spraying pesticides at your site, and for that you have to pay. A different story. The challenge is how they enforce those taxes. Because when they ask for these taxes and you challenge and say this is illegal, they shut down the base station. So that is more the problem. That is why in advocating and to try to prevent that whatever the problem is between those subnationals and the telcos, they should be prevented from going to shut down the site. Because remember, even if they shut down the site, from a regulatory point of view, NCC is still going to hold me responsible for a certain quality of service. Denied me access. The repercussions from the federal level and the NCC level remains the same for me. So in discussing taxes, while Modupe will be worried about the quantum and all that, maybe because I'm a lawyer, would prefer a situation where I have an ascertainable way of having a control. Use means that are outside the law to try to enforce those taxes, especially when they are illegal.
Thank you. Before we go to the floor, I just have one quick question for Carl. And Modupe talked about the revenue outlook to the rest of the year, but a lot of it seems to be dependent on the tariffs. So how dependent is MTN on this trajectory, this recovery? If you can speak more to the tariffs, and if there's going to be any increase.
I think we've clearly put forward the position of the industry, and the dependency on that on tariff increases. I think the message has delivered well, and the Honourable Minister made a comment in public, and he was piled on as a result of this, but I think it demonstrates that the challenge is well understood. While the entire economic framework of this government is being laid out in detail, and there's so many moving parts, there's the fiscal reform, of the telecoms industry, the oil industry, etc., etc. The regulators are affording us some flexibility to make adjustments on some bundles, to at least on a short-term basis be able to keep the engine going, keep the while we work towards a longer-term solution, which is a much more towards a price floor general uplift. I think it's also very well understood that we are the tallest tree in the forest, and we can take the weight of these impact, inflation impact, etc., a lot better than small operators. And the sustainability of the smaller operators is a challenge for the regulators. So they're looking at this holistically, and we're optimistic that it's a listening government. We will land it. But
a question?
Yes. Thank you very much. Excellent conversation.
A question?
Yes. Thank you very much. Excellent conversations. My first one is to the CCSO. And these are some of the things we're trying to prioritize. So if a subnational can just come and deny you access to your station, that's not good for Nigeria. And we want to be able to address that. So my request to you would be, if you haven't done that already, if you can put anything together, either as MTN or if you want to, so I'll look forward to whatever you can share with us. The other comment I have, I think, and this is one of our recommendations in the quick wins, is where trust that. Even the register that has been created, you see governors saying they don't trust it, World Bank says better, you see governors saying they don't trust it, World Bank says better, but it's okay. I'm saying, why don't we use mobile phones to just do conditional cash transfers? For example, I can even identify whether you're poor from your on your phone, right? So I see how much you load for voice, for data. You load 50 naira and you're flashing people for the whole month. I just know you're poor already. Can I not give you 5,000 on your phone that you then use maybe as food stamp? You even decide what you want. Not that I'm forcing rice on you. Maybe you want yam. And I don't seem to have clarity as to why we can't, so that we can use the kind of mobile that you guys are doing, not only for financial inclusion, but also for conditional cash transfer. Because today, first it was COVID-19, now we're having crisis because of fuel subsidy removal. You don't know what it will be tomorrow, but we need that framework to be effective and something that can also help with transparency in terms of government spending. Thank you.
I think for me the key thing is, yes, we have submitted papers to the committee through autumn, and then as MTN, we have already submitted papers.
Thank you, Taiwo. Nice reversal of rules where we get to answer the questions to the public sector. But no, very happy to have that question. I think you're right, and there's already been discussions ongoing between the EBC and the National Identity Management Commission, how we can use our wealth of data and information to provide adequate information to the government around the income brackets of people across the country. Hassan, our CEO, seated right beside Ralph, is there. He's actually done an exercise like this in Afghanistan, I believe is right. So he's preparing that information for the relevant authorities so they can see who are the addressable markets. I'm very pleased with your Momo suggestion. We're going to grab it, and I'm going to camp outside the office for the next 2 months to ensure that mobile money is the channel we use to distribute these support to people across the country. And it really is the best solution, not marketing ourselves, because we have 7 million subscribers. With 3 steps with the USSD code, *671#, you can set up an account, get a PIN. In fact, the customer doesn't have to have an account. You can transfer it, and then for them to receive the account, or to receive the money, they activate the account. So we have a solution to reach everybody across the country, USSD and app as well. And they don't even have to have the account open ready yet. You can just transfer them to it and activate it. So we're happy to work with the government in the distribution, in the analysis, and we're already in some way down that journey. So please to support in every way we can. Thank you.
Great. Any questions from the floor?
Mohammed's microphone. Thank you.
From SPG Securities. Carl, in your presentation, you mentioned the topic that resonates with me watching MTN over the years. in that the business has an uncanny ability to bounce back from extreme FX and macro events. So we're in one of those events now, and it does seem quite extreme in that you have both the Naira devaluation and you've got a large component of your cost dollarized through your tower leases and so on. You seem quite confident that the margins will bounce back in the next few years, back to the 50-odd% level. Would like to get a sense of what gives you that confidence, and whether it's more about driving the top line and operating leverage, or is it about the expense efficiencies that you've spoken about? Thank you.
So, to be clear, it's about all, and we have to drive all in parallel. We do need to improve our yield and our effective rates per minute. We've already started that journey. We've done it in voice in the earlier parts of this year. We've started the journey in data, and we've done it in a multitude of factors. We've reduced our free traffic from about 19% to 7%, so that improves ERMB and improves yield. We are optimizing, with the approval of the regulator, some of our bundles. Approximately 30% of the most highly used and revenue generative bundles on data. So there's a top line expectation there. There's also a top line growth that we expect out of an improved competitive performance, improved quality of service, higher smartphone penetration, higher consumption. So top line needs to move on. Then there's operating leverage, cost management. And cost management is everything from looking at internal efficiencies, including our capital expenditure, the effectiveness of every dollar that we spend on capital expenditure, decreasing unitary costs, addressing things like tower co-leases by moving from dollar-denominated towards Naira-denominated, by moving from technology pricing towards space and power pricing. That explains some of the rationale around the decision we took to move the 2,500 sites, and we'll continue as tower co-leases to explore with those options. And then there's internal efficiency management as well within. So top line, we need to improve. We need to improve from tariff increases, better competitive position, take advantage of the market opportunities that affords. Cost structures, we need to improve. Big portion of that leases, but every other aspect of our expenditure, we look at rigorously, and Modupe has spoken to that we're actually ahead of our expenses. Modupe, I think you have...
Yeah, exactly the same thing. That's why we put in the slide margin recovery. We feel that, and then we'll be able to see what is going to happen to that medium-term guidance. But at least we still see some low-hanging fruits that we can use to recover those margins.
Hello? Thank you so much for the opportunity. My name is Taj Ibrahim, Chapel Hill, Ghana. When Carl was making his presentation, he showed how the EBITDA margin was over 60% when the business was largely driven by voice. And I think now we have a situation where data is playing a more crucial role in terms of revenue accretion, but the market was 60%. And at some point, there will be a situation where the data business revenue is higher than the voice. So I'm just trying to understand, would there be a point in the future that we will see the EBITDA margin somewhere close to 60% or possibly more? That's one. Two is around the CapEx intensity. At some point, we have seen it rising, and I'm trying to understand how much incremental impact should we expect on the EBITDA margin as intensity rises. Thank you.
Okay, can we have another question?
Okay. I'm Uchenna from Xerox Investment Management. So I have just two questions. One is on the issue of cyber security. As technology is advancing and MTN moving into a digital company fully, we also expect that fraud is also going to advance and more attacks in the future on this technology business that you are building. So as investors, we want to know what efforts NTN management is making, or what are their plans to handle these possible threats in the future? Then my second question is on the issue of the digital revenue. You talked too much about the fintech, but from the financials over the years, where I personally have been seeing wonders is in your digital revenue. And lastly is on the issue of tax harmonization. So the taxman is very confident on NTM. So I would like to know, on this issue of tax harmonization, is there any talk going on maybe MTN Nigeria helping with the large amount of data that they have in collecting this tax, or helping in collecting this tax when it's harmonized? Then finally is on the evaluation losses going forward. So how is it going to impact the business going forward? Like the third quarter, we saw that the margin dropped in the EBITDA, mainly at the direct operation cost. So should we expect that the cost of running this business is going to be higher going forward? Are there efforts that the management is making to take us back to the 53% or more EBITDA margin? Thank you.
Okay, I'm going to answer one or two of the questions, but then I'm going to pass on to Shoyinka. So prepare yourself on cybersecurity and speak to the DDoS attacks which we experienced. I think that's a good example to show positivity. Aisha, can I see Aisha somewhere there? Wave your hand. Yeah, Aisha is there, and Hassan for digital revenue. Digital, great growth trajectory. I think 6% of revenue from digital is very possible. Hassan and Aisha will speak to that, and I'll leave to Modupe to talk about tax harmonization, how we're helping already with the VAT aspect. But let me answer the first question. We will not get to 63% EBITDA margins. Those were the But let me answer the first question. We will not get to 63% EBITDA margins. Those were the utopian days, and that happens with voice. Impact of that, a lot of that was driven by our market share, incoming voice revenue, because of our much larger base, and the nature of the cost structure around a voice-focused, higher data revenue than voice. And that differential is actually just going to grow, even though voice continues to grow under that base. So 63%, that's a very long time ago, 2011, 2012, more than 10 years ago. That you would only ever see in voice-centric businesses. I don't think you ever see that in any telco, except you're a single operator, excessive high prices. So the 50 range, I'm not giving any guidance. The 50 range for a business of our nature, which increasing data revenue is reasonable, is a good delivery. You'll see in our full year earnings release when we engage with you what we see that to be. But I think that has answered the question. And the capex intensity, I think we've promised somewhere in the rate of 18% capex intensity. Can go 1% up or down. We will always try to manage that downwards if we see the opportunity to do so, but we don't do so at the cost of missing opportunities of the future. For example, 5G as an example. But no big expected in capex intensity, even as we accelerate on the fiber to the X space. We look for internal efficiency, unitary cost pricing, and then of course as much as possible to manage our capex intensity. So I hope that answers Tajuddin's question. Shoyinka, you have a microphone here. You want to take the question on cybersecurity and speak to how we very skillfully suppress the DDoS attacks?
Thanks very much.
Forgive me, Shoyinka Shodunke is our Chief Information Officer. He has a dedicated general manager in his team, Gideon Adekile, who is dedicated to cybersecurity and information security as a whole. So he's the cybersecurity, of course, with Mohammed Ufai, our CTO, expert and champion. Thank you.
Thanks very much, Carl. And I think just to address the question, I think cybersecurity is what keeps most organizations at bay today. And it's something that we take very seriously as well. I think knowing the journey in which we've embarked on, which is to become a technology company rather than just a telco, in which we play in that space today. It's something we've reviewed and understood the implications we would have. So to address that, there's a program by the group of which certain standards have been set in terms of what we need to achieve. What we do with that is we understand that there are various touch points and there are various ecosystems that have actually grown just beyond the sort of traditional services that we do provide today. And to ensure that a lot of endpoints have been deployed just to ensure that we're not just covered as a telco, but we expand our coverage even beyond our own traditional services to the sort of new services that we do employ today. But just to touch on which Carl did raise right now, which was on the DDoS attack. Sometime this year, we had the biggest DDoS attack within this, within the continent. We were getting about 150 gigabytes of attack per second. I think that was well applauded across the industry in terms of our readiness. It's an area that keeps us awake. It's an area in which we keep investing in, and we'll keep investing in. One of the things we do is, as well is in terms of the sort of keep investing in. One of the things we do is, as well is in terms of the sort of assessments in terms of our readiness, of which we employ the big companies to come and look and review our processes and our readiness. We just had one about 3 weeks ago or 4 weeks ago where the whole management, we were gathered together and the processes were reviewed in terms of our readiness. Thanks.
Well, mindful of time, I have some questions online and I'll quickly ask. It's a question from Bank of America. And is it mainly related to leases?
Okay, so well, I'll answer that question. Yes, the revaluation or the devaluation of the naira, and that's what threw out some unrealized losses on the exchange. And while I still have the mic, there was a question that the previous speaker asked that in terms of tax harmonization and what we're doing, we're already doing a lot of initiatives with the government. And we're, for instance, one of the things that the previous administration implemented was actually from one of the things we complained about, which was the collection of VATs. Oftentimes as a player, we pay VAT to suppliers, but these VATs are not remitted over to the authorities. So feedback, they made us a direct agent, so we now withhold, collect on behalf of the government, and that has also helped increase the government revenues in that respect. So I think that's the comment on it.
And I think the question on digital revenue will be answered during Hassan's presentation,
yes.
To save time. Sorry.
Thank you. So thank you, everyone. Okay, Mr. Nona, I will give you the last question. Thank you.
Thank you, Mr. Moderator. Probably before I raise my question, I need to take the permission of the chairman of the boards and also ask that Carl permit me to also use him to justify why we didn't clap for Modupe. First, I can confirm to you that much earlier in the day, a lady approached Carl. I don't like your hairstyle. And what Carl did was to order for Brazilian hair, and then that got better. By the time he met the second lady, I don't like your glasses and your eyelash. And then Carl got new orders, fixed them up. So you begin to understand why they didn't clap for you. However, between the two of you, it's important that as an investor, should your earnings go lower than it is compared to last year, and because you have a dividend policy, will the company be willing to take part of the reserve to even what you paid last year in the new year? Because one of the things I've also heard, in terms of data, we've done well. In terms of manpower, we have exceeded targets. In terms of tax, we are harmonizing. So I hope all of this will also be a benefit that will go to the share moderator.
Okay, so I'll just answer that in the interest of transparency. Good thing is that as the chairman of the audit committee, I'm going to actually approve those resolutions whenever they do come. But having said that, I think I can't speak on behalf of the board. The board, that's sole prerogative of the board what to do in terms of the year-end results or declaration. But rest assured that the things the board would always consider is with the volatility in the exchange, you have enough reserves to cater for difficult situations. Now, based on from where you sit as an investor and the chairman of our statutory committee, you're quite aware that there are some PLCs that actually have the entire reserves wiped out. That is zilch. They're actually negative reserves. I won't mention names, but you just check them on the exchange. Now, MTN as it is still has reserves and actually has made a profit despite these headwinds. So that just tells you about the strength of the company's financials. Now, whatever the board is going to decide is going to be based on the outlook of the heading. And look, like everybody's, I actually belong to the school of thought that the worst is over. I mean, look, we devalued the currency from 460 to 777 as of October 902. Okay, so you're not going to have that quantum of devaluation going forward. Doesn't matter whichever statistic you're looking at, be it the EIU outlook for where Naira should be in the next 2 to 3 years. As long as you don't have that quantum of devaluation, that steepness, almost 100% now, if you don't have that year on year, then you're not likely to have the strong impact in terms of your unrealized losses going forward. So if we subscribe to that school of thought, then things can only get better. So if we subscribe to that school of thought, then things can only get better from next year in 2023.
Thank you, Modukwe. We do have a day. Hassan will come and present, and Eli will also talk about Fintech. I think you have an opportunity to ask more questions during those sessions. So thank you very much. Please, a round of applause for our panel.
Thank you very much. We appreciate you. Thank you. Thank you. Well, one of the recurring things that came in their conversation was digital inclusion. I'm very sure that will be focused in the next segment, but now let's take a short video. We'll go there.
A new chapter is being written, one that goes beyond speed and connectivity to put the future at our fingertips. At MTN, we believe everyone deserves the benefits of a modern connected life. This is why we continually invest in expanding our network. This is why we are committed to using our technology and assets to help build a better tomorrow. MTN Nigeria has successfully deployed 5G network infrastructure in over 800 sites across the nation and launched fixed wireless access, home broadband services, and fiber to the home to millions of Nigerian households, enabling access to internet connectivity. By placing ultra-fast internet connection in the hands of Nigerians, we are powering dreams and ambitions. We are enabling new industries, unlocking value chains, and opening limitless doors across Nigeria. This is an integral part of MTN's Ambition 2025, aimed at accelerating the digital revolution in Africa. Inspired by our nation's potential, we are committed to bridging the digital divide. by furthering smartphone penetration through strategic partnerships with device financing platforms and providing the opportunity to own genuine, high-quality smartphones. As we bridge the digital gap, we are driving industry-leading connectivity solutions by showcasing the incredible possibilities of 5G technology and partnering with organizations and institutions to enable optimization, create new efficiencies, automate processes, and streamline operations. As this chapter unfolds, we are excited because it's about more than just the technology. It's about the people, the stories, and the dreams that now have wings to soar.
And so, distinguished ladies and gentlemen,
and thank you for coming and allowing us to present to you our business, our operation, and what we are doing. Mainly, I will be covering here in the 15 minutes a brief overview of where we are with respect to the different business lines that we are rolling out, how we are identifying the opportunity, and how we are able to capture them. We are a leading, we call ourselves, because we are a leading mobile operator, and those numbers speak to that. We have around 78 million subscribers, out of which 43 million are data subscribers, and around 9 million so far we have active Momo users, and 8 million on our platforms. We are having an 80% coverage on 4G, so far 7.5 5G population coverage, 3G we are covering 86.4, and the 2G population 93%. But the opportunity is still there in every business line, starting by our core business. Nigeria is a young population for the 4G, which means there's a lot of opportunity still to grow in the data space. And we were able to take advantage of this. We were able to take advantage of this opportunity, and almost year on year we are growing around 40 to 45%. And we strongly believe that this will continue for many years ahead of us. And it's the same story around the usage. The more use cases are being developed, either by us or by third parties, you can see that the consumption per usage is going significantly as well, going by 57% in the past 4 years. And now we are in the range of 8.6. 8.6 is still also below the average in similar markets, which means that also we have an opportunity to grow, still to grow in that space. While focusing on the data and the growth in the data, While focusing on the data, we are still growing strongly on the voice. Not as the growth is not comparable to the data, but we are still growing in both subscribers and also in terms of revenue. In the past 4 years, we grew around, adding more and more data subscribers, that even the number of voice subscribers is growing year on year. How we are doing that? We are re-engineering our value. How we are doing that? We are re-engineering our value proposition. We started in the past 2 years launching products that are what we call converge, which means we package voice and data in order to capture and stretch the usage and give value to the subscriber, and also take more, increase our ARPU as a result of that. We also, in order to grow the data and give access to the subscriber to more content and interesting OTT, to OTT providers, we are having partnership, and like Apple, like Amazon, etc., where we are bundling as well data packages, and with those packages they are having data they are having content. This also allowed us to stretch further the return we get from the data. Personalized return we get from the data. Personalized, we are optimizing continuously the acquisition customer journey and also the customer relation journey. This allowed us by introducing digital transformation solution, allowed us to offer services to the customer in a way and keep on serving them in a way that is more efficient and more satisfactory to the customer. On the home broadband, already Carl covered it, but we are growing strongly for the past 3 years. We are going ahead, we believe, in achieving the 5 million home connected as part of the Ambition 2025. In the past 3 years, we grew more than 150%. And we grew in the different technology in the broadband, the 4G, fixed wireless access, the 5G, and the FTTH, and the MBB. So we are growing in the different segments, even though we are growing 100%, but we believe, as also covered by Carl, there is still a lot of opportunity and still a lot of market. We are now the servers. As you can see, so far it's only 1.7% of the households that are covered in Nigeria, which means there's a big market for us to capture. And in our ambition, we don't want only to be in the space of fixed wireless access. We want to cover all the aspect of the broadband business, which means fixed wireless access, but also we want to move up as well to be one of the main players in the FTTH space. Now, the strategy that we are following so far, I won't go into the details, but we are being very efficient in identifying the opportunity and differentiating ourselves with a very strong value propositions by efficiently reaching the subscriber with our network, with our sales channels. We have a strong market positioning, so cost-effective the fixed technology. On the enterprise platform as well, as you can see, we are growing significantly. In the past 3 years, we grew by 30%. We are on our way as well to achieve the Ambition 2025, and we are growing in the 3 pillars of the enterprise business, from mobile to fixed and even to ICT. Even though there are many players in that space, as you can see in each one of those fields, but still we believe we have the bouquet of products under enterprise that can give us. You can see that our revenue share in comparison to our competitors. As you can see, we don't only provide core services, but we are building and expanding further in the non-core services, like efficiency in which we drive those different services. Going forward for the coming years, SME will be a main target for us. We want to digitalize the SME, digital services, and expand their markets, not only with the traditional physical transaction, but also the digital. And we want to be a partner to the public sector. We want to also provide digital transformation projects and value proposition. And we bundle it with the ICT solution, like cloud, like IoT, etc. And also we have a very strong infrastructure. We want to all platform. That's why in our portfolio in the coming period there will be network as a service, payment as a service, etc. We are growing significantly in terms of number of users, but still there's a lot of opportunities and potential in the market to grow further. Our digital revenue is growing year on year more than 50%. And also IOBA, we already reached around 8 million. These are the areas that we believe has a lot of potential. As the share of digital now is very small in the media, in the education, and B2C marketplace. In comparison to the potential potential that we see. Sorry. Okay. So this is the share, the present share, and as you can see, digital share in developing markets is much higher. That means there's a lot of opportunity to grow in those different sectors in the digital business. And this is the reason in the coming years we are focusing on those pillars: gaming, OTT, music, digital advertising, e-health, and education. And we're gonna play in different space. Whether under gaming, we want to choose the partners. Either we go alone or we choose partners in order to play the role of publishers, distribution, etc., etc. And of players that already are in that sector, but they are not able to scale, and they are not able to capture the opportunity that I showed you earlier in the market. Why we believe we can do it? Because we are leveraging on our big subscriber base, on our knowledge of the market, on our network coverage, where we are covering more than 80% of the population. With this, we are able so far of the population. With this, we are able so far to attract these and the partners to allow them via our platforms to provide services, digital services to our subscriber. We have a good understanding of the local industry, or content industry. We want to consolidate. We believe we have an opportunity to consolidate this fragmented industry and transform it into an institution and a real business that can be compared to Bollywood. In order to support the business, as you hear, artificial intelligence, etc. So we have the strong infrastructure that allow us to explore new opportunities, get the opportunities existing and identify market potentials with this network and IT solutions. The key takeaways. So far, the performance, we already covered it with Modupe and Carl. But so far, despite the headwinds, we are able to grow significantly year on year, and we believe this will continue in the future. To our performance up to date, we were able to capture by stretching the potential of our core business while also growing in the new business lines. And we had the support of a very strong sales distribution channel that we were able to digitize, and also a strong customer relation where we are serving the customers not only via the physical channel but also digital channel. And we are introducing a new solution, like recently with our bot on WhatsApp. We are now testing ChatGPT in order to provide a better service using the digital channel. The way forward. Sorry. Yes, we are an established company for many years, but we believe we are still at the beginning of the growth curve. We are going to use Jeff Bezos, where he says that every day is day one for them. We believe that we are in that phase. We still have a lot of opportunity to grow. Our core business will remain our main focus, and we're gonna put the necessary investment in order to supply the growing demand. We will leverage on our size, on our presence, on our strong brand, and invest smartly. As Carl said, while we are growing in digital, while we are growing in home broadband, we are not investing, we are investing in a very smart way. We are identifying in a granular level where are the opportunity, where is the market, and we are able to invest and get the return in a fast way. The example is 5G. So far in the 5G, in the cluster where we are having 5G, already the 5G traffic represents 25%, because we were able to put the sites where it is needed and where there is potential. And we will keep on implementing. The digital transformation will continue as part of our journey in order to support in a very efficient way and cost-effective way our business lines. With that, I end and would like to thank you for listening.
You might need to stay a bit behind to be part of the panel. But let's put our hands together for him. I appreciate it. Thank you very much. Thank you. Thank you. We'll need 5, 6, 5. To welcome the Chief Marketing Officer, Adia Soho. Let's appreciate her. She's stepping forward. And then, finally, the Chief Technical Officer, Rufai. Thank you very much. One part of the things I'll be doing will be just ask them if one question or maybe half question. You are in charge of business enterprise. How can you dimension the potential of this business and how big do you think it can get? And I want of this business and how big do you think it can get? And I want you to factor in what he said when he was ending. Yes.
Thank you. Thank you very much for this very interesting question. I hope you can hear me.
Yes, they can hear you, don't worry.
Thank you. The current addressable market size. That's better. Thank you. So I did say that the current addressable market size for B2B in Nigeria is about 1.8 trillion, and core telco services contribute about 40% of that pool. Nigeria continue to evolve and become even more mature. And this is because Nigeria is really at an point of inflection. And most of these businesses are looking for solutions that will help them to optimize their businesses. They are looking for solutions that will help them to grow access to market, looking for solutions that will help them to drive productivity increase, and also looking for solutions that will help them to drive overall business efficiencies. And that provides a huge opportunity for us to grow. The second trend that we are seeing is increasing formalization of the economy. Nigeria is home to about 40 million SMEs, and this number is as high about in any part of Africa. What's interesting is that these small businesses contribute about close to 50% of the national GDP. They also contribute about 85% of employment in the labor market today in Nigeria. What else is interesting about this segment is the fact that only about 5% of them are formalized, are formal businesses. 95% of them are informal businesses, and they currently operate in the agriculture and trade sector. What we have seen over time, and of recent, is the increasing number of SMEs who are moving into the formal economy. And this is driven by the kind of digital tool of trade that we and our partners have deployed into the market. The third thing, or the third trend that we are seeing, is what I call the secular trend. Implementation of things like regional and local policy intervention, like Africa Continental Free Trade Area, and of course other local intervention by the local government. We believe that will create new markets, And this new market will also create new opportunities for new businesses and also existing businesses to scale. And for these new businesses and existing businesses to scale effectively, they will require digital tools of trade. And of course, this provides huge opportunities. We have seen that as digital maturity increases, the need for businesses become even much more complex. And of course, the kind of solution that they require that will help them to drive a business leads to development of higher margin solutions like converged services. Carl did mention earlier that our IGDP currently sits about 6%, and we see that growing to about 12% by 2050. That also provides huge opportunity for us to grow in our segment. So as enterprise business, MTN business, we are currently capacitating ourselves. We've seen the value that exists. We've positioned ourselves as enabler of this growth, and we're capacitating ourselves through alliances and partnerships, and also investment in what we call ICT Center of Excellence to help us position.
Thank you very much. Thank you. Let me go to the Chief Officer. She's looking absolutely very focused, ready for the question. You know, since yesterday, the last 2 days, everything I've heard has shown me that MTN is a market leader in every aspect. Technology, voice, data, money market, all of those things. And then one is beginning to wonder, first, is there any headroom of growth left? And secondly, what are the drivers of service for you in terms of revenue? Please, can you unmute her microphone?
I'll just borrow this one from my colleague, thank you.
I'm sure that is working now.
Hello? Okay, thank you. Good afternoon, everyone. So yeah, I think there's still fantastic headroom for growth in Nigeria. If you look at our population projections, if you look at the size of Nigeria's economy projected to, 2050, I think there's still an astonishing amount of growth left in this market. And a lot of that growth, life is powered by connectivity, life is powered by MTN. So I think even now, most telcos, when you see the kinds of great growth rates we are seeing on data, you usually have voice going in the opposite direction. Yet we've still realized double-digit growth even on the voice business in the last couple of years. So I'm definitely quite optimistic about the headroom in the market.
All right, thank you. Mohammed, you are the technology man in the room now, and we welcome you. A whole lot is on your table. I would like to know, you recently launched the 5G, and which is known for very good speed and reduced latency. Why do you see the need to also explore an acceleration FTTH?
Thank you very much for that question. Yes, we recently acquired 100 megahertz of 3.5 gigahertz spectrum, and we launched 5G on it. And 5G is known for delivering very high throughput or speed because of the size of the spectrum and other technologies, and also very low latency. And because of these two attributes, it enables a lot of use cases that were not possible on the previous technologies. However, because 5G is still a wireless technology and is using spectrum, and that's why I mentioned the 100 megahertz spectrum we acquired, it is still finite. Spectrum is finite, and the volume of data demand that we're seeing means that at a point, even that 100 megahertz spectrum that we have will be exhausted. And therefore, we still see the need for fiber to the home, which will enable home usage on that FTTH capacity, which is much, much higher because it's only limited by the terminals that you put at the end. So despite the capacity of 5G, we still see that homes will require that FTTH to carry the data traffic that we foresee, which is quite high. Just to give you, in many parts of the world, about 85% of traffic is carried on fixed, which is FTTH type delivery. The reverse is the case. Most of our traffic is carried on the mobile. We have very little fixed. So really, sustainable growth of the, to be able to provide capacity for the growth that we foresee in future, we need that fixed technology. That is why we are looking at FTTH.
Thank you very much. Thank you. CEO, I'm very sure you know. And I was beginning.
The digital services are actually the services that that can roll out. We can roll out with a higher margin, because actually mainly the only cost element is the revenue share with the revenue share that we give to our partners who provide the content, who provide the services. So that's why, I mean, in addition, the main is mainly to drive two things: to drive data usage, because actually the more you put digital services, digital services that exist in the market, and in addition, we are taking a portion. It's a premium. We are taking a portion of the revenue that we are generating for our partners.
Okay, thank you very much. This is earlier when the first panel was there, Champions League of Technology. But the people we have here are actually those who are very close to the first 11. When we play the game of technology, they can come in and score the vital goal to bring profit. So you have them here. The business person is over there. The technical person is here. The marketing person is here. The chief operating officer is here. Let's open the floor. You can throw in your questions. Yeah, hands are already up. Let's move the microphones now.
Good afternoon. My name is Silla from EFG. Thank you for your presentation. Perhaps just a few questions around fiber to the home, considering it's quite new to the sales mix. Perhaps you could help us understand the fiber to the home strategy in terms of how the margins would compare to mobile data, perhaps. What assumptions inform your target for 4 million customers by 2025? Some of the competitive advantage of conversion rate in terms of homes passed.
Currently, do most of those revenue come from? Because I'm sure not all these areas are currently bringing in revenue now. Thank you.
Okay, I'm very sure. Did you get
No, I didn't.
Okay, please ask that question again.
Okay, it's on the digital revenue. So I can understand that MTN is going into gaming. They are currently doing it, advertising e-health. MTN is going into gaming. They are currently doing it, advertising e-health and EdTech. So the digital revenue, which of these areas is currently driving that revenue at the moment?
We still have the ladies.
Hello.
Yeah.
Okay, my name is Mokhtar Ali from Family House Fund. Okay, so my question goes directly to the Chief Marketing Officer. I had mentioning that there are still opportunities in the market to achieve. So I just want her to share which one is the most low-hanging fruit among the marketing strategy to achieve that.
There's a lady in front here. Let's bring the microphone to her. All of the people speaking from the audience have been men.
Thank you. Just the first question, I think this goes to Hassan. Carl in his presentation referred to fixing the sales and distribution network, some sort of revamping taking place, and that it was almost complete. Can you just go through that? He really spoke to technology contracts with the tower companies being a problem. What does that mean in your head? What are you doing to address that or bring down the costs associated with those contracts?
Okay, so you have 2 minutes in the plate now. CEO. You have 2 questions.
Yeah, I will cover a little bit the first question regarding the FTTH, and then I will give the floor to Mohammed to go into through the details. What I would like to actually address here is the strategy that we are following in the FTTH, which allowed us so far to hit the 24% conversion from home pass to home connect. And which means, because we need to manage 2 things. First, the conversion rate, and second, the cost per home passed. That's why we are implementing business intelligence analysis in order to identify the location that will allow us to efficiently, with the lowest possible, tool in order to roll out the FTTH recently, I mean few quarters back, and as get a 50% average, this means we will have a good return on investment. It will help us as well, as addressed by Mohammed, offload the mobile data, which means we will reduce the investment. We will not reduce, I mean now, but I mean it will help us in terms of expansion based on the percentage of offloaded traffic from the mobile to the FTTH. It will allow us to manage better our capex intensity and keep on supplying the service, the data services with a high quality to our customers. And if you want to add on the
Sure. So the other things you mentioned on FTTH is what is our competitive advantage. It was also mentioned in one of the presentations, because we already have over 30,000 kilometers with that kind of fiber coverage, which means we can easily expand to cover homes. That is the main advantage that we have. The way we select, I mean, as Hassan mentioned, we have a lot of tools and data that we can use to determine where we will have the best in terms of FTTH versus 5G. You mentioned 5G, so we have a way of balancing where 5G goes and where FTTH follows. As I explained, even the 5G is finite because of the spectrum, so eventually the FTTH can follow to offload the 5G when that time comes. You spoke about the margins. So FTTH, yes, initial deployment cost is high, but then the maintenance cost is very low. So typically the EBITDA margins are higher on that business. I mean, just to paint a picture, there is no tower cost involved in FTTH versus the mobile. I think those are the questions you asked on FTTH. I think while I have the mic, I can also address the question on technology pricing. So yes, technology pricing is one of the issues with the TowerCo contracts. And you asked for explanation. The explanation is that if we deploy a new technology, we pay for that deployment of that technology, and it comes with additional capacity. So if we deploy 4G, for example, we get additional power and additional space that goes with that 4G technology. What are we doing to minimize the cost? So as much as possible, when we deploy the technology and pay for that, we try to expand the capacity that that technology delivers. Modipe spoke about spectrum. That's the one thing. The more spectrum you deploy, the more spectrum you have, the more traffic you can carry on that same site. The second thing is things like massive MIMO and other technologies that we are deploying right now that will also multiply the capacity that we have on the site. So yes, there is a site, we are paying technology for it, but we are carrying 3 or 4 times what we would have carried without using these technologies, which makes that site much more profitable because we are maximizing that space that we have on that tower. These are some of the things we are using to improve the revenue significantly that we generate on those sites, and therefore reduce the impact of the cost of TowerCo.
Okay, I'm sure that the question was directed at you.
Yes,
yes,
me.
Please go
yes,
ahead.
there was. I was asked about low-hanging fruits for revenue, and thank you for talking so much. I really had to take some time to think about that because it feels like there's no such thing. But I'll talk about a couple of opportunities that we are keenly observing. So first, thanks to the great network that we have, which currently runs on 2G, 3G, 4G, and 5G. What we've seen with our consumers is that immediately, if for instance they have a 2G phone and they go up to 4G, or they have a 4G phone and they go up to 5G, we see a significant change in their consumption and spending pattern. So as much as we want to call that low-hanging fruit, where we are generally with adoption, and this doesn't just affect 5G, it affects all of the new technology that we layered onto the initial network. We have to ask customers sometimes to come in and make a change, or we have to ask customers to take an action. In the case of 5G, customers, for instance, have to upgrade the software on their smartphones now. So this is something you can ask customers multiple times, but they'll do the upgrades when they feel like doing the upgrades. Of course, the early adopters will upgrade as soon as it lands. I'm one of those people. As soon as Apple pushes an update, I get it done. So that's, I think, one potential low-hanging fruit opportunity. I think the second, which is part of the strategy we applied this year, and we will continue to apply going forward, is increasingly giving our customers very personalized offers, so they get what they want, they pay what they want, and that increases how much value they find from the network. So that also really allows us to finally optimize our pricing and the propositions that we offer to customers. So those would be sort of like the two opportunities that I would give as low-hanging fruit.
Okay, if I may add as well, and then I will cover the two remaining questions. I mean, the beauty and the potential in this market is actually that there's still a lot of opportunity coming from the organic growth. As in one of my slide, I showed that still, I mean, it is a big percentage of young people in the country, and also the organic growth coming from the people that still need to convert to smartphones and need to convert to 4G. This is considered an organic growth. The most important thing is in order to manage our margin, is to supply that growing demand in an efficient way, as explained by Muhammad. And that's what we are trying to do by getting a spectrum instead of investing in new towers or a new BTS, and using a new technology that provide more capacity but with less investment, like the massive MIMO, etc. So it's actually the demand is there, and we need to continue on supplying that demand. And because of the macroeconomical problem, we are finding a way to supply that demand in a very efficient way. On one of the questions regarding the digital revenue pillars, so far the main driver of the revenue is coming from the rich media services and the value-added services. We are embarking on a journey in order to increase the contribution of the other pillars that I showed in my presentation, which is mainly the content, mainly the videos, the music, the education, and the health. So this is the question to the digital revenue question. And yeah, the sales and distribution. I mean, you have Shino behind you, who's our head of sales, but I will explain briefly. We were able in the past 2 years, and since also Shino joined us last year, to do two things in parallel. One, to start the journey of digital transformation of our sales network in order to be able to have end-to-end visibility to what's going on in the channel. Two, we also assessed and analyzed our spread in the market on a granular level, which means we moved from areas to clusters to now we are assessing the cells and how our presence is actually matching the demand that we have under those cells. And we are using tools. Even we are partnering with Meta in order actually to see the spread of our customers, their movement, and we are plotting efficiently where we need to put our point of sales in order to be able to give access to the subscriber and to our products. And this actually helped us a lot improve our market share in net additions, and also in managing that what we are doing now in managing the Momo also distribution and the wallet activation.
Thank you. Let's take the next set of questions. Please, let's have a deal. Make sure you include the enterprise business officer in your questioning this time around. Please, let's have the microphone move around. We have somebody here.
Yeah, all protocols to be observed.
Okay.
My name's IMR. I really appreciate this platform, which has given us the room to look into the capital market. And my basic concern is in looking at the value of the customers. We've all talked about all we stand to gain as a company, shareholders. What about the customers? This is my basic concern because I have been looking at this network as the best that has ever happened to Nigeria. And it has covered a wide range of places. And now these customers, the federal government has failed in many ways. The individual organization who wants to assist these poor masses has failed in a lot of ways. And on a daily basis, this business is going high and high and high in values. Now these customers, federal government that has come in has a lot that it wants to do for its poor masses. And the bank is not helping matters, and there's no facilities that could help. Why don't you use this platform to now reach out to all these customers and make impact to them? Because if we are looking at the impact at the database and all the...
Can you go straight to your question, please?
Yes. Now, this is my question. How does these values affect the customers? Because we have the Momo agents, and the Momo body helps every customer to own a wallet. Okay. Now, the federal government are going to be disbursing funds. How can the company help relate with the board or the necessary bodies to share those funds via the Momo agent, so that it can be a circular value where a lot of people who are already subscribers could access those funds, and then dividends that will come to the customers, how at least they could earn and be celebrated somehow in this value. So how do they get that value?
I'm sure you got his question.
Yeah,
he's a very passionate young man.
Passionate and a little bit political, but I would address only the business part of it. So what value are we providing our customers? Mainly connectivity. We are giving them access to information and to the digital space. How we can distribute the funds that that one of the gentlemen was talking about, as explained via Momo. Actually, this is the plan. Because if we're gonna distribute, let's say we go ahead with this project and get the funds to be distributed to those people that need, those funds will go to the wallet, and using the agents, those people will be able to cash out or actually consume from the wallet balance they have. So that network that we are building, where we have, and Eli now will touch on it, we have already 270K agents spread all across. We have more than 200,000 merchants in order to facilitate any type of transaction, and this will be one of them. Regarding the dividends, I'm not sure what you mean by dividend, but whatever funds coming from a large enterprise that objective is to be distributed to many subscribers, actually Momo can be used, our agent network will be used for that, and even, as I said, also the consumption can be done via our merchant network.
I noticed that the timer is off. Is our time off? Not yet. All right. You raised your hand earlier. Please go ahead.
Good afternoon. Nadeem from SPG Securities. With your ambitions in 5G and the kind of data growth you're seeing, very soon your backhaul becomes a bottleneck in the network. Just want to get a sense in terms of your backhaul right now. How much of it is fiberized, and how much do you, how quickly do you expect to have to expand that to, let's say, 80, 90%, whatever the number is? Just like to get a sense of your backhaul and your strategy going forward.
Did you get his question? Okay. Please hold on a bit. Let's take one more. Please make sure the enterprise business officer is included in your sharing. Okay, please. Is it for her? Let's be sure. It's not. Okay. Please bring the microphone here. Microphone coming to you, please, madam. Thank you.
Thank you. It's a follow-up question to Mohammed. How many of the 14,300 towers that you have with IHS have moved to this new approach you have in 4G, the example you gave with massive MIMO or trying to get data traffic up faster in those, each of those sites. And knowing what you know now, how would you have structured these contracts with the tower opcos? Please don't give the simple answer of, oh, we just wouldn't have been charged by technology upgrade. What is a realistic outcome that you can have for new tower contracts going forward to address this technology cost that's clearly come a bit higher or taken you by surprise?
Okay, let me continue.
Okay, let me address the question on backhaul first. So yes, you're right. For 5G, backhaul is needed, and our approach is to have fiber or E-band on all the 5G sites. So apart from fiber, there is also E-band, which gives fiber-like speed, and we also use that to backhaul. So that's the approach. So we have a very ambitious plan to fiberize a lot of our sites, and of course we'll start with the hub sites and then the 5G sites going forward. So it's either fiber or E-band on 5G, and there is no issue there. And how many of the 14,000 towers have a massive MIMO or additional spectrum? So let me also add that this 14,000 will now, there is 2,400 that we have moved, that will soon move to another tower co. So our towers with IHS will be about 70% after moving those towers. And spectrum, when we get additional spectrum, it also goes to all the sites. So that's one of the key advantages, and I think Modupe addressed some of that, of expanding through spectrum. So if the 2.1 gigahertz spectrum that we got recently was deployed to all the sites that have 2.6. So that's advantage of spectrum. And for massive MIMO, we look at the demand, we look at the sites that are highly utilized. So instead of building new sites to take the capacity, we now deploy massive MIMO on those sites. So again, the deployment is on demand, and because we are highly disciplined in capital allocation, it's only where we see the need to do that that we do. I believe those are the questions. The new tower contracts, right? You say yes. As I think it was also addressed that going forward, any new tower contract will look at the issues with the old contract and try to address them in the new contract, and that will include space and power and the local currency mix as well.
All right. This is what I will do. We have barely 5 minutes to wrap up. I'll give each person about a minute to begin to have a final word. MTN is moving on very well, doing absolutely well. From your departmental point of view, what should the customers? And the young man who was passionate there was shouting about customers. And I know he is a customer who buys data and airtime. So let me kick off with you from the business point of view. A minute.
Yes, I actually saw that passion.
Yes.
And I wanted to say that our customers are also businesses, irrespective of the fact that, we spend a lot of time on consumers, but we also do understand that it's businesses that are going to propel economic growth in Nigeria. And you asked the question, what do we have? What's the need for our customers? We have seen ourselves as an enabler. We've positioned ourselves as an enabler for growth. We've listened to the fact that connectivity is extremely critical for digital transformation. And we do know, we have the understanding that as MTN, we have the largest breadth, the largest capacity to transform different sectors in this country. And what we have started to do is to spend time, especially in the small and medium segment, where we believe there's huge potential for those 40 million small businesses that are looking for opportunities to scale their business, but might not necessarily have all that is required in terms of marketing spend, in terms of access to market, that's required for them to scale their business. What we are doing right now is to work with government. And I hear you when you say that the government has done certain things. We are working with the government. We listen to the minister say that the private sector would have to come and work with government to develop and grow the market. So we're working with the respective government entities to build a platform that will enable and accelerate growth for small businesses. We are looking for small businesses in Nigeria that have innovative ideas, that have built solutions in the digital space, and are looking for access to market. And this platform will give them the opportunity for them to scale their business. We have 77 million consumers on our network, and we believe that we will providing that leverage for them, providing that access to market for them, leveraging the 77 million customers that we have will help them to scale their business. So there's a lot going on the business side, especially focusing on the small and medium enterprises. And by the first quarter of next year, you will hear a lot more about this.
Okay, thank you. Let me go to Mohammed before you do your 1 minute. Only a few days ago, the media was agog, social and traditional media, about a technical glitch that wiped off the money some people are owing online. And then people have gone back to church to fast that such technical glitches should be going on. Going forward, technically, what assurances are there from MTN?
Yeah, I mean, whenever we have a technical glitch, we do what we call RCA, root cause analysis, to understand what caused the glitch, what actually caused the glitch and what are the things that led to the possibility of that happening, so that we can put measures in place to ensure that that glitch doesn't happen. And in this case, that has happened. We have done the RCA, and we have looked at what else we can do to ensure that we minimize the chances and avoid such glitches in future.
All right, thank you.
And then my 5 minutes, my
1 minute.
1 minute is, so we're highly focused on quality of service. So the customers expect that when they spend their money and buy credit, they should be able to use it and they should have high quality. And there are environmental factors that affect our delivery of quality of service, but we are adapting all the time. This is the environment we operate, and we are adapting to all the environmental factors and delivering quality of service to our customers. Then further expansion. We have 92% population coverage in Nigeria. There are still areas that are not covered. We are looking at using the most efficient solutions to cover those places, and we have found them and we are deploying. We are not going to rural locations with towers, with tower cost and all that. We have efficient solutions that do that so that we can provide that capacity. Our belief is that still that everyone deserves the benefit of a modern connected life, and we are finding the right solutions that we can deploy even to the deepest rural areas for everybody to enjoy this service.
Thank you very much. Over to you.
Thank you.
All right.
So, I look after the core business. We've talked about voice and data a lot. We've talked about the headroom for growth, our population, our economic trajectory as well. I think the growth rates that we've seen are not anomalous. I think that we will continue to deliver those kinds of growth rates in the future. And I think what excites me particularly is, how 5G is going to lead us to the next 100 million data users, right? Which I think are available in this market, in the short to medium term. So I think for me, just figuring out ways to lay the groundwork for voice and data, high growth in voice and data services using 5G is would be my final word. I'm still quite excited about that.
Okay, so Hassan, you'll be having the final word. 1 minute.
Yeah, the team covered most of the points. I would like to use this occasion to thank my team, and 75% of my team are ladies. I'm fortunate to have this group of people that is allowing the company to deliver the results that you are seeing, the growth that we are seeing, and it is due to their hard work, to their dedication, we are able to deliver a very good service that the people are satisfied with, proved by the NPS, because this is how we monitor the customer satisfaction, and so we are number one in the NPS. So thanks to the team, and thanks to all the company's employees that allowed us to deliver what we are showing you here today.
Thank you very much. Let's put our hands together to this amazing panel. Photographers, do you want to capture them? All right. Yes. Okay, it's on Fintech. Yeah, okay. So you have a video. Thank you very much. Thank you. Very quickly, we'll be moving on to our Next section, which is actually on Fintech. So we'll have a short video to lay the grounds and foundation, and then we'll bring out our presenter. Let's have the video, please.
As at April 2022, the financial inclusion rate in Nigeria stood at 64%, with 36% of adult Nigerians lacking access to financial services, such as payments, savings, credit, and insurance. The Central Bank of Nigeria has a target to reach 95% by 2024. We are committed to supporting the CBN's financial inclusion drive, leveraging our extensive network to provide financial services to the unbanked and underserved nationwide. Following approval for a license from the CBN, Momo PSB formally launched a range of financial services in May 2022. Within 6 weeks of launch, Momo registered over 2.4 million users, engaging in approximately 7 million transactions. Recently, active mobile money wallets increased by 53.1% to 3.6 million. And we keep pushing to ramp up the numbers and drive further adoption. We are truly excited about the possibilities because beyond the numbers, there are the stories of impact. Impact as a result of access to financial services. Every story of access and financial inclusion is significant. Each starts with the individual and expands to entire families and whole communities.
That's amazing. 7 million transactions. The CEO of Momo PSB, Eli Hini. Did I pronounce the name right? Okay, so far. You're welcome.
Thank you. Good afternoon. Okay. Good afternoon, all. And I know our session is between us and lunch, so we'll try and do our best, to ensure that we can catch lunch on time. I'll start the conversation by looking at the market opportunity and the context, and then we'll go through the rest of the slides. In terms of the market opportunity, I think Carl mentioned earlier that we see, Nigeria with its huge population and, a fintech ecosystem that is under-penetrated as an opportunity for us to actually provide wallet solutions to Nigerians. And if you look at the transaction matrix, in 2019, McKinsey had a report that showed that 96% of transactions were done by cash. And that gives you, a balance of what opportunities that we can explore in this market. Then if you look at, the number of people, if you look at the population, only 30% of the population in 2021 were using either a handset or an internet solution for processing digital payments. So those present opportunities for us. And of the population, only half have some form of financial account or a bank account. The rest remain, unbanked and presents opportunity for us. Then the other thing I'll talk about is the opportunity around remittances, projecting to be about 23 billion in inbound remittances alone by 2025. So looking at all that opportunity within this market, we believe that the market, presents an opportunity for us to provide solutions, financial solutions, innovative solutions that would, make the lives of our customers a whole lot brighter. Now, if you look at the penetration in other markets, you see that Nigeria still has a lot of opportunity for penetration. In terms of the competitive landscape, we have businesses like us, which is the payment service banks, and our core advantage is our distribution and reach and the ease of onboarding. We saw the conversation that came through on using wallets for distribution of palliatives, and those are opportunities that we can tap quickly because with our deep penetration and rural reach, we'll be able to reach the majority of the population who will be benefiting from these palliatives. And of course, the assets that we have from the network effect of 77 million customers on the GSM side presents an opportunity for us to onboard those. On the mobile money OTT players, we know they've also done a lot of investment in this market and continue to lead with the app channel, which is one of the channels we have also focused on in the last few months to make sure our app is also as competitive as possible. And also for the others, POS or agency model has been the driver of delivering solutions. If you look at the banks essentially have looked at opportunities even within the space where they've put some of their extensions into Fintech solutions. Now, I want to talk about the opportunities that we can scale, looking at the Nigeria opportunity. If you look at countries like Ghana, it took a long time for them to scale their business. Our business today is only in its second year, and already in terms of our penetration, we are sitting around 13%. If you compare where Ghana was after 3 years of its operation, the penetration into the registered base was around 5%. It was in year 4 that Ghana got to 16%, and then from that point on, they moved on to 35% and 49%. So we believe that we're on the right trajectory to be able to get to those numbers very quickly. What will happen in our case is that we will get there faster because we are in year 2 and we already are 13 compared to the likes of Ghana, who today are key markets who are sitting around 5% in their first 3 years of operation. In terms of our strategy, I've talked about leveraging the 77 million customer base on the GSM side and our distribution footprints. We also are looking at opportunity in partnerships, and I'm sure we know about the partnership that is ongoing with MasterCard. Then in terms of our operating like a fintech, our speed of innovation and speed to market, the fact that we are also focusing on acquiring new talent in the space and also getting non-MTN customers to also use our platform. And this will be leveraging our app solution to drive that. Then, leveraging MTN's core assets, we believe the distribution gives us the first leverage, and also the brand gives us another because of the trust we've built in this market over the years. And of course, the assets of data and airtime that presents opportunity for us to monetize and drive it as incentives for wallet adoption. In terms of our strategy, in terms of delivering our core verticals, we've already commenced, on the basic services, and we'll now be transitioning into the advanced services where we'll be focusing on payments, both online and offline, microcredit and savings products, and then, of course, the remittance opportunity, which I mentioned earlier, $23 billion by 2025. So what are the things we'll be doing in terms of leveraging the opportunity in Nigeria? The first one is, I mentioned our app play. We believe that the USSD is already a strong proposition, and so we need to quickly move into the app space. And like I mentioned, our app is ready for the market, and you see, the new look of our app. In terms of acquisition and quality of, acquisition, we've also looked at the distribution infrastructure, and we've enhanced a couple of things. We've looked at the way we reward our canvassers or our field sales team to make sure that we reward on activity basis, and so that will transition quickly, our wallets from just registered wallets into active wallets. We've also looked at our distribution infrastructure to make sure we incentivize the trade towards promoting transactional activity. Then on the distribution, I've talked about the strong distribution, which we will leverage strongly. And then the awareness side, I'll talk about Project Booster, which is one of the key, efforts that we've put in to accelerate the growth in Nigeria. And I'm sure if you go into the market, you begin to see some visible signs of driving visibility in this market. Our investment in the trade to make sure we provide customer education, customer understanding of the various solutions that we bring are very key in this awareness journey. And then, of course, our product portfolio expansion, because the more use cases we present to customers, the more adoption we expect to generate from this market. And last but not the least, we see the opportunities in the north, where a lot of the customer base are underserved. And so using our distribution infrastructure, we believe that we can provide basic services starting from wallet and then transitioning to advanced services in that market. In terms of, unlocking our 5 verticals, I've talked about them already, and so I wouldn't want to go back through them one after the other. But just to highlight that payment presents our biggest opportunity. First of all, the fact that once you have a wallet, you can actually pay using a person-to-person. So how do we make person-to-person very pervasive in this market and transform that into a payment tool will be one of the key things. And if you look at what we've said about the fact that that basic wallet presents the average person an opportunity to interact with the financial service ecosystem, then P2P becoming pervasive is very important and will drive our payment strategy. Then we also are looking at how we bring our merchants into the play, and you see that the booster plan is already delivering on that mandate, because from 6,000 merchants, we are now close to 200,000 merchants because of the booster plan. In terms of our growth model, the story here is just to say that we have started, delivering our wallet, which is our basic services, and we'll be transitioning into our advanced services of payments, of remittances, and that is where we believe we'll be able to unlock the revenue potential of this market. Microcredits and savings will all come in. So that transition, we are already in that phase, and we are transitioning faster than you find in most of our markets that today have scaled very well. In terms of managing our risk, we've also looked at interventions that would de-risk the business. First of all, from the execution side, we believe that we've structured our distribution now to support agile execution for us. The teams have been resourced in the right areas, and we also are incentivizing at the right level to improve on the agility of our speed to market. Then in terms of competition, the disruption of the current model is where we are focusing, leveraging on our 5 verticals and the partnerships that will unlock the potential in this market. And last but not the least, we believe regulation will play a key role in how quickly we transform this market. And so we are in constant engagement, and like Carl said, with the regulator CBN, so we have multiple engagements at that level to make sure that the regulation is structured enough to support our acceleration program so that we can offer the right services to customers. In conclusion, I want to say that this business needs strong leadership and governance, and we have the right team in place to deliver on the strategy, and that's the team that is delivering on that. We are still committed to our Ambition 2025 plan and targets. Today, at the end of Q3, we have close to 4 million active wallets out of 27 registered. Remember the example of Ghana I gave, 3 years, 5%, we are 13% already in our second year, and so that journey is even on a faster trajectory compared to those markets today. And if you look at the merchant numbers, clearly you can tell that our Project Booster is on track to deliver on our gains. And I'll conclude by looking at some of the impact areas that we've picked up from our Project Booster plan, which is a 2-year plan that we've put in place to accelerate our growth. So having put in place all the governance structures and processes, we went in for a plan that would deliver on the strategy and achieve our Ambition 2025. And you know, the pillars that we've looked at is in terms of the customer awareness, because we realized that a lot of our customers did not know a lot about our service and our product portfolio. So a lot of investment has gone into branding, and so you see a lot of trade investment in branding, visibility, communication, and customer education around the service and, you know, the utility. And that will be, you know, activities that will continue for the next 18 to 24 months, where we'll focus on driving customer awareness, customer education on our product and service portfolio, using all the various platforms, including, you know, our promotion of the English Premier League and all the digital out-of-home platforms that are available to our customers. Then enhancing our value proposition. I talked about the opportunity that we can leverage in using our app channel to support the USSD channel, which is already entrenched and very actively driving growth. And also the opportunity to intervene in the north and, you know, bring solutions that will transform the lives of the average customer in that community. Then, in terms of our product portfolio expansion, I've talked about it already. The focus will be leveraging the key verticals in the advanced service portfolio, providing microcredits, providing micro savings, and then digitizing payments in general. And I've talked about how pervasive, you know, person-to-person transfers can be, but also the journey we have started with our merchant play. You realize that we are on a very fast trajectory to ensure that the customer having money in their wallets will not first think about cashing out, but will look for opportunities to utilize that, because we've provided a lot of opportunities for them to pay for goods and services, driving through that. Then the opportunity around the Pan-African remittance opportunity, I've talked about that already, and how we intend to leverage the remittance corridor using, you know, inter-regional trade as one of the opportunities to drive remittances. Then, you know, in terms of leveraging the GSM distribution, a lot of work has been done. I mentioned the amount of investment that has gone into our distribution infrastructure, the level of, you know, training and skills development that has gone there, the additional work we've done in terms of incentivizing at the right level to drive the level of activity that we want at the customer level. All these are part of the S&D digital transformation journey that Carl spoke about, and we are going to leverage that to be able to align our business to drive the level of penetration that we believe will bring the business to, you know, the doorstep of every Nigerian across the length and breadth of this country. So we believe that we have what it takes to deliver on our mandate. And in terms of takeaways, I've talked about the execution of the booster plan, which is our key focus for the next 18 to 24 months to drive, you know, acquisition of wallets and also activity of these wallets to ensure that we can bring financial solutions to Nigerians. And I've talked about the distribution infrastructure which we'll leverage, advanced services focusing on lending and scaling our remittance portfolio, and then, of course, the right skill sets of people that will deliver this strategy. I think on that note, I want to thank you for your attention. There will be time for Q&A, and so we can take the relevant questions that will come during the panel discussion. Thank you very much.
Hello. Our brother here from Ghana, is it possible to say Akwaba to him with another round of applause? Thank you. Please come over and take your seat. Let me invite the CEO, Mr. Carl Torella, to please join us. And then the CFO, Momo PSB, Omolara Michael Madu. Give this to her, Mike. All right, so we welcome all of you to this, and this will be more like our final panel. I'm happy the CEO is here. We have really given you a lot of work to do today. You've been on this stage almost 4 times, and you're going to be here the final time to do a closing remark. You know, but let's get back to what Ellie just talked about, the Momo PSB. While he was presenting, I was hearing the word agents and at times merchants. Are these two words, can they be interchangeably used? And then if there's an open ecosystem, for example, how does that add to your advantage as MTN Nigeria, and does that increase your cost?
I actually think some of those questions are best answered by the subject matter expert, Ellie. Okay? I'm not quite sure I have a full understanding on the open ecosystem.
Where anybody could just probably just come in.
Open API, yeah.
Okay.
We'll talk about that.
Let me allow Ellie to take those ones, and I'll take follow-up ones.
Okay, so thank you very much for the question. In terms of agents and merchants, they provide 2 different services to our customers. Our agents are the point of interaction of customers, first of all, where they get onboarded, where they are able to fund their wallet, where they are able to access other related services through the support of the agent, and also where they are able to cash out or take money out of their wallets when they need to do that. Whereas in the case of the merchant, these are service providers who are accepting mobile money as a means of payment for the service that they offer. So that's the clear distinction between the agents and the merchants. But of course, the customer of ours who is an agent can also play the part of a merchant too. They can play the dual role where they still accept own services and still offer agent services. But in terms of distinction, that is a clear distinction between the two. And on the open platform, it has a lot of advantages. First of all, it allows for fintechs to connect to our platform and offer innovative solutions that we will not have to burden ourselves in developing. And when they develop those solutions become available to our customer base. So we are expanding the scope of services that customers can access in a very fast and agile manner, and that improves on the utility of our platform to our customers. Because in the end, if the customer has multiple uses of our service platform, is to our advantage. But we are also offering these fintechs who may not have the capacity and the investment to be able to invest in huge platforms like this, to use ours to propel their innovative ideas. I hope that explains.
Okay. See, maybe I'll come back to you again. when I stepped up now, some people were wondering, you said you are ready to provide the medium-term update in 2024. All right. And they're wondering, why not now?
Okay, first, I mean, the one thing I do want to reaffirm from what Ellie said is, look, every mobile money wallet can be a merchant. Okay? But small and medium enterprises, not large businesses, it could be Hilton Hotel that can be also a merchant as accepting mobile money payments. If you look at Safaricom, a lot of small traders just use their personal wallet as merchant acceptance. So, but we look at it as more businesses. So why not now? Because there's a lot of volatility in the market. We can give an guidance today, and next week is changed, and the week after is changed, and the week after is changed. And that would be just too turbulent for the markets to get a good sense of what's happening. I think they've gotten good feedback on the actions that the federal government, particularly the central bank, is taking on intervention, clearing the backlog of commitments on US dollars. That will affect the confidence of the market in the foreign exchange rates. That will affect the foreign exchange rate and will affect the outlook for us going forward. So we prefer to do it at the regular quarterly reporting period, particularly at a time of volatility like this, because if we release anything today, we're going to probably have to update it in a week's time, and a week's time, and a week's time. And until that's clear, I don't think it will have much value.
Okay. Madam, people are wondering, when will MasterCard start its work with PSB, and what will be the focus areas?
I hope you do understand. I won't be able to delve into so much detail about MasterCard at this time, but I can refer to the presentation which Ellie made earlier on, where he spoke about the opportunities we are looking at in terms of advanced payments, that's in terms of the cards, using the MasterCards for customers to be able to access and withdraw from their accounts as well as remittances.
Okay. All right. We have Ellie here, we have Molara here, the CEO is here. The floor is open. We can begin to engage them now. In case there are some questions you missed while the CEO was here, you can ask those questions now. I can see a lot of hands up.
Good afternoon once again, and my name is Taj Ibrahim Chapel Hill Denham. Thank you for this opportunity. My question is just one. I wonder if you are willing to disclose the EV multiple of the transaction with MasterCard with respect to the Momo business. Thank you.
Well, she just said that she was not ready to give details. But madam, I don't know if you want to add some flex to what you said earlier.
Thank you. I did mention earlier on that the MasterCard deal, I'm not permitted, or it's not a time when we can disclose details about that. So we've just highlighted that in terms of our plans, how we intend to serve our customers, the propositions that we'll be looking at around MasterCard, but not into the details of the numbers. I hope you understand.
I mean, that's a group transaction. And this is MTN Nigeria Capital Markets Day. I think Ralph, Tato, and the team, Serene, have been engaged, the international investor base looking at MTN Group, and they will provide answers on those kind of questions. Thank you, Lara.
Okay, so more questions, please.
Hello? Okay. All right, good afternoon, everyone. Soji Sholanke here once again, heading Fintech Investment Banking for APSA. So I think the question that was asked earlier, that's actually public information. So if you actually check some of Ralph's interviews, I think he's answered that question previously. But in terms of Ellie's presentation, thank you very much for the additional insights. Really good to hear about your comments around the accelerated shift to advanced financial services from basic. Giving your learnings about the Nigerian markets. I think that was a very good update. Also good to see how well you are looking to leverage the MTN core infrastructure. So whether that's the brand, but also certain additional benefits around geospatial mapping, distribution infrastructure, etc. Perhaps just two questions. One is, can you shed some additional color around the regulatory dynamics that would be helpful for what you're looking to achieve going forward? Okay, what are some of the changes that you'd like to see that are supportive of your ambitions and looking ahead? And the second point is just around your northern play. Okay, what would be required for you to actually roll out and execute successfully for northern Nigeria? Thank you very much.
Okay, thank you for the question. In terms of the regulatory dynamics, there are quite a number of ongoing engagements with the CBN. I think the whole idea is to create an enabling environment where the financial service providers can cooperate and collaborate better. The banks should feel open enough to engage with us so we can work with them. The beauty of that is because of our distribution scale and our retail expertise, we can bring a lot more value to banking services that they would also benefit from. Instead of looking at the two businesses as competition, we should look at the level of collaboration that can come through. And one of the examples I gave was the instance of where we can offer microcredit to our customers. The banks have the funds to support that level of lending. We are going to be able to offer the customer base to them. We have the database and the intelligence on the customer to give them, a scoring matrix that improves on the quality of that lending. And if you take that example into a standard banking discussion, that would have gone to just one or two individuals where if there are any exposures, they are at a higher risk versus that money coming into a more, wider ecosystem where multiple people are in play and the amounts are smaller and therefore the risk levels are even better managed. What that does is that we bring all these people into the the financial ecosystem, and whatever funds they onward bring into this ecosystem can also become available in floats to this bank. So that is the line of discussion we are pursuing with the regulator so that it becomes a win-win conversation rather than a conversation of competition that does not help the ecosystem to grow. In terms of the northern play, I've talked about our distribution infrastructure. I've talked about the effort that has gone into, ensuring that this distribution infrastructure is well supported and, incentivized at the right levels to drive the northern play. So that's one of the distribution infrastructure that we bring. And then, of course, I talked about our technology, leveraging the assets of over 77 million Nigerians already who are on our network. And so these people can open a wallet within a minute, 2 minutes because of the ease of opening that wallet and the fact that they can use any basic phone leveraging our USSD technology, and then also transition to the app for those who have smart phones. So those will be part of the northern strategy. Then the last but not the least is the area of retail, where we are trying to digitize the retail so that the average retailer can accept payment using either their own personal numbers or their personal wallets, because those transaction values may not be high, or get a merchant wallet to be able to accept payment. So those are the frontiers we'll be looking at. And of course, where the palliatives come in, we think that we are well positioned to support in that regard. Thank you.
Thank you very much. All right, there are a few more hands in the audience. All right, somebody's already standing, please.
Hi, my name is Farouk Mia from All Africa Partners in London. My question is for Mr. Ali again. Could you expand on the progress on growth of users and how this translates into growth in the financials. From what I read between the lines, you're saying the growth in users may be faster than what you saw in Ghana. However, the financials may be slower. So if you could expand on this, please.
Okay, let's take some more. All right.
Good.
All right, please.
Good afternoon. Silla again from EFG. Just to better understand subscriber acquisition and the technical operation of the system, as well as monetization. So on acquisition, just considering that Momo is not new to the market, you have banking apps, fintechs. Could you describe the ideal Momo customer and just how the network acquisition process targets this ideal customer for MTN, where you have a competitive advantage to provide financial access in this market, given the competitive dynamics? From an operational perspective, could you help us understand interoperability in the market? To what extent does this go to? Is it interoperability of wallets, merchants, etc., and how that influences your approach to penetration overall? And from a revenue side, just to understand your pricing structure for the different services. So you have your cash in, cash out, and advanced services like payments. What's your pricing approach to that? Thank you.
Can you take one more question before we begin to answer?
Okay.
All right. Okay, one more. All right.
I'm Uchenna from Xerox Investment Management. So this question is for Kyle. Personally, I'm very bullish with the digital product, but I love your optimism on the fintech. So I would like to understand on two particular areas of this fintech product. One is on user experience. I would like to say my own experience because I'm a Momo user as well. So I downloaded the application, the mobile application, and I registered just like any other user. And I will also use OP as well, which is something that is very common among the locals. So after you register, for each time you want to log into your Momo app, you have to put your password and your username and the OTP that will be sent to your phone number. And sometimes you might not, their phone number might be in a different phone, which is a kind of delay. And when you log in, for each transaction you want to do, at each stage, there's a latency of like 1 or 2 seconds, which is a delay. And why I see it as a delay is that when you use similar app that do similar service, you don't experience this particular delay. So I don't know if this is a play or it's something the team is aware of. But I would like to know what the team is doing on the user experience to improve the user experience. Then 2 is on the issue of, he said one of the advantages MTN has on Momo is the network and penetration of the MTN Nigeria currently. So I want to understand how that's an advantage, how Momo as a business, is it a separate entity or is it integrated into MTN Nigeria network? Because just like you use your phone number to create your Momo account, it's something you can also do on PalmPay and you can also do on OP. So I want to know how Momo is different or if there's any way it's integrated into the MTN network that creates some kind of extra advantage for the users. Thank you.
All right, thank you very much. So, do you want to kick off or him?
Well, maybe I'll start off by making 1 or 2 comments. The first thing is, particularly for the analysts, Eddie will talk about moving from focus on number of users, wallets, and when that starts to provide financial results and yields. And we are in a bit of a different market and trajectory than what we've seen in the likes of Ghana, Rwanda, Uganda, Congo, Brazzaville, etc., etc. I'd also remind the audience that the journey of mobile money in Ghana started in 2009. So there's a lot of expectations, and of course we're going to take all the learnings and compress the journeys that we've seen in other markets. But there is a certain period of hard grinding that you need to do to get up to scale. Another thing I wanted to point out is particularly when you look at the financials of MTN Nigeria and you look at fintech revenue, We account for extra time under fintech revenue, and there's a bit of a distortion between last year and this year as a result of the barring of outgoing calls for MSISDs without NIMs. So that, of course, depressed the growth of our extra time services. Now we've gotten through that. We also have a lot of initiatives around extra time to drive that revenue up. So when you're looking at the financials, keep in mind a lot of the financials, the actual revenue sees from extra time, which was distorted by last year. The advantage of having Momo PSB as a subsidiary, but it has a separate governance and it is regulated very clearly by the Central Bank of Nigeria, is a few things. We have a strong technology platform with KYC information. We follow all the regulations around data protection. So that's the first thing. There are a lot of overlaps in the kind of services that we can provide, from airtime recharge, and most importantly, the distribution infrastructure that we have across Nigeria. As Ellie has elucidated, 97% of the transactions in Nigeria are cash-based transactions, right? That's item number one. To convert people from cash to electronic money, it's something that has to be done over time. People have to have the comfort of paying their cash into their account, transacting, very often taking their cash out. But over time, they take their cash out less and less. And the convenience of your ability to take cash in and out of your wallet is a critical part of it. Then, of course, we have the business intelligence on where the opportunities are, and of course, the skill, competence of the team. So there's a lot of advantages. The primary one is the distribution network, the ease of opening accounts and knowing your customer. And of course, without governance, you will know that your money is always going to be safe. Ellie?
Okay, thank you, Carl. I think you've answered some of the questions. So I'll go straight to the one on progress and financials. In terms of the progress, like I highlighted, the booster plan is our accelerated program, to drive the growth that we envisage to deliver on our ambition 2025. And like I mentioned, we are beginning to see that progress. First of all, in terms of our wallets, we are at 3.6 million and still counting. And I referenced the fact that 3.6 into our registered base of 27 million is about 13%. And some of the advanced markets we're not at that pace in their second year. So it means that we are getting some traction into our operations. Then you talked about the financials. Yes, we are now, heavily running on basic services, and then we transition into advanced services. For this market in particular, the revenue at the basic service level, unlike countries in like Ghana and Uganda, the basic service revenues are limited. For instance, if you take person to person, which is the most pervasive service you find, today that service is offered at zero cost to the customer. So we don't monetize P2P. Whereas in the other markets you can compare us to, which is Ghana. Ghana started with a very healthy revenue on person-to-person transaction, and it's still a healthy part of the operations. Today accounts for close to 20-30% of their total revenue. So that is part of the differentiation you have in this market. So we will begin to see some of those numbers come true when we move into our advanced services, where we believe the pricing matrix will give us a lot of value. So that explains why you see the transition, but in terms of the financials, it will take a bit of time for the advanced services to kick in and give us the financial impact that we want. Then on the subscriber acquisition question, what I would say is, for the average person who has already an MTN line, what we are saying is that he is able to set up the basic wallet, leveraging that data. So the customer gives consent, and then that data then can be used to open a basic wallet for that customer. So if you now span that into our base, then it means that's the potential of wallets we can open on the fly and get going. Then in terms of, the other advantages that brings, because we also have a very extensive distribution network, and we are, converting quickly our retail channel into agent network. Our agent growth is also expanding very quickly. Today we are approaching 300,000 active agents, and so that means that we have a good amount of presence for customers to interact with our service and be supported. Then I talked about our merchant play, where we are now, heading to 200K active merchants, which also means that we are supporting the opportunity for customers to pay for goods and services using their wallet. And so that increases the use cases and the interest that customers will have, and improves upon, the customer adoption journey for us in this market. So the core of the focus now is in those areas. And then, of course, the fact that we are also transitioning quickly into advanced services to increase the use cases for our customers. There was a question on the app, and just to highlight that, yes, indeed, those concerns that you've picked up has been taken on board. And during my presentation, I indicated that we have actually come up with a new app, which will be getting to the market in the next coming days into weeks. And that will give you the kind of experience that you can now begin to compare with the experience that you want. And so we've taken those inputs into consideration, and we have put that into developing a new app. And you hear from us very soon about how that app will be transforming the experiences of our customers. So I hope that addresses the questions that I captured, unless I missed anything from the questions. Thank you.
May I just top and tail on the app matter, that we recognize that this is a gap that we had in the market. The team, Ellie, our IT team, created an agile squad, and we used the agile method to develop an app. And as Ellie has said, it's been accepted on both the Apple and Google Play stores. We're going to go to market very shortly. And what we did is we compared to best product in the market, and we're going to progress until we are by far the best. But we wanted to make sure that competitiveness to all the apps in the market, and you can mention any of the competition names. The OPay is obviously one of them, but we also look at the traditional banking applications and see what is the ease of use, what are the options you have, do you have all the functionality, how do we take off the number of steps you need to do to complete a transaction to minimize it, etc., etc. So we have a really good app. It's imminent to be launched. That's in Eddie's hands, and we're going to publish it, and you'll see that it's a product which is very, very strongly competitive with the market. Thanks.
Thank you very much, CEO. Let's take another set of questions, and I can see several hands up. Please, please, in your distribution of questions, the lady over there is the Chief Financial Officer of Momo PSB. So please also target her.
Excellent. I've got one lined up just for that, for the lady. I believe the PSB regulation requires a certain amount of rural coverage. I mean, do you see that as a hurdle for the PSB? And then the booster plan. What is the budget, or how much is it going to cost, or do you have a blank check from Modupe? Thanks.
All right, we'll just take one more, and we'll leave it to them to answer and begin to wrap up.
Yeah, I've just got two quick ones.
Okay, all right.
The first one is just, could you help us reconcile a bit more why there's such a big gap between registered users?
We are not hearing you.
Can you move the microphone a bit closer?
Sorry. Sorry, can you hear me? Yeah. Okay, so firstly, could you help us reconcile why there's such a big difference between registered users and active wallets? Just to understand a bit more of the background on that. And secondly, just on the remittance opportunity that you spoke about, we'd like to understand if your current license allows you to do that and how you plan to unlock that opportunity. Thank you.
Okay, thank you very much. Ellie, your...
Okay, so I'll take the last question. In terms of the registered and active, registered is any one who has a wallet today. But activity is based on a 30-day cycle. You should have done at least one activity in a 30-day to be considered an active customer. So if you did a transaction over 30 days ago, when we classify our active base on a 30-day basis, that customer will not be included. So active customers are customers who have performed at least one transaction in 30 days. And registered is someone who has a wallet and may not have performed a transaction in the past 30 days. So that's the classification. Then on the remittance opportunity and the licensing conversation, yes, we are not directly licensed as an MTO, but we partner remittance institutions or companies to deliver the service. At the end of the day, it's a service offering to our customers who can receive remittances directly into their wallets. And that's where we come in, and that's where we partner institutions who have the license to do that, so we can leverage our two resourcing opportunities to deliver the service to. So it's through partnership. And hopefully, if we get through with the MasterCard conversation, that's also another opportunity we see we can unlock with that partnership. Remittances, where it will be from account to wallet or wallet to account. Yeah.
Well, it's been an amazing 2 days. Wonderful. Let's put our hands together for MTN Nigeria. Let's appreciate them. Wonderful. I was telling one of your staff earlier that I walked into the Congress Hall of the hotel, and I walked in here. This one seems to be created from Disneyland. Amazing. The creative people who put this room together, let's appreciate them. The technical guys, it's been wonderful. Thank you very much.
I'm so sorry, Ibiri. There is an investor holding up his hand, and I don't want people to fly all the way here and feel, even though we have another engagement, feel they didn't get the opportunity. So, please go ahead and take the opportunity.
Sorry, I think we just missed the question about the booster plan and the cost.
Yes.
Yeah, thanks.
All right.
Hold on. Lara.
There's a one beside me. Okay.
This one. Or can I use this one?
Hello?
Yeah, closer to your...
Can you hear me? Okay,
Yeah.
good. Okay, so on the booster plan, you'd have heard Modupe talk about expense efficiency in his presentation. So he doesn't give open checks towards things like to booster plan or any initiatives. On the booster plan, without mentioning numbers, we do have approval after going through our capital allocation process to ensure that we are spending on the right things. And as Eli had presented earlier on, we are focusing on distribution, mainly around the customer, driving customer education awareness. Of course, the app that was mentioned as well, and product development. We're also doing a lot of branding and advertising in the market, which I'm sure you would have seen to improve our visibility and trade awareness.
My apologies, I just didn't want him to feel like...
All right. I want to thank all of you. But for all the investors that left your countries and you are here, can we give them the legendary Nigerian round of applause for being here? We thank you. We appreciate you. Do not listen to what anybody is saying. This is the ultimate investment destination. We welcome you to Nigeria and we say thank you for being with us. Thank you very much, everybody. Thank you. Let's have the photograph with the team, and then the CEO will have his closing remarks. Give me that mic. Okay. So the two will go down, will step down, and I will welcome the CEO for his closing remarks.
Okay. The problem with when you're the CEO with this kind of event is you never have time to sit down and take notes. So I'm going to have to speak off the cuff. So what did we learn? We learned that Carl has to be careful when he's climbing upstairs. He almost fell flat on his face yesterday. What I've always known is my best dancing partner ever is our company secretary, Uto Upana. So we learned that from yesterday evening, and that my dancing skills are more associated with my Nigerian side than my Swiss side. So that's also good news. But thank you, everyone, for having and coming to participate and share with us. There's a complete and clear acknowledgement that the macro in Nigeria is challenging, but the leadership has changed. And the leadership that we have in place now in Nigeria has a clear focus on growing the size of the economy, or rather than maybe taxing the economy to a larger extent. And the policy direction that's been given, and it wasn't just in the quality of the content that was delivered to us, even the manner in which the content was delivered was exceptional, because both Dr. Bosun today and Taiwo Oyedele were effectively talking off the cuff without any script and any teleprompter. This is what they know, this is what they live with, this is what they believe in. And they're delivering the message of what they believe in, areas that they have a deep understanding, and what they're feeding back to the president, as well as what they're receiving from Mr. President in terms of the direction that the economy should go in. We think that over the next quarter, that's between now and the end of the year, early next year, we're going to see a shift and a stabilization of the economy, the impact of some of the economic directions that we have been promised, and clearly the investor base is looking for proof points. The biggest number one proof point is going to be around the clearing of the foreign exchange backlogs and the stabilization of the foreign exchange. But with the faith that that is going to be addressed, we go back to the fundamental story. What is MTN Nigeria all about? We're 22 years old, but this is still one of the most exciting businesses that you'll find anywhere in the world. From the multiple of perspectives, first is with the social impact we have in giving Africans connectivity and dignity and creating value in the societies that we operate in. But then let's get on to the hard stuff. We continue to grow on voice strongly. We're conscious that we need price ups, and we're getting them in drips and drabs to have a sustainable business. Data outperforming. If you look at Q3 specifically, over 40% growth. We did have some dips in Q2, but the trajectory is moving forward. We lead on technology, we lead on customer experience, and then we have this huge runway of fintech ahead of us, and the digital ecosystem, which we're experimenting, but having successes out of the experiments that we're building, I can grow to 6% of revenue, and even more in the future. And then there's the big wide open space of FTTX. The largest operator has only passed 67,000 homes. Why don't we have more? Because the access to patient capital, the capital that can wait for a higher EBITDA return, but it takes some time before you get your payback period, is hard to come by. People who know how to operate in this environment with the challenges, there are not many of them. And we think it's a space in which we can really go in and do the land grab, the exact same thing we did in the wireless space. Then we talked about the efficiency programs and a lot of discussions about the IHS issues. And for Samantha, I'll put it out there to you, but to all the investors here, exactly the same thing. We locked ourselves into technology upgrade contracts. At that point in time, I think the perception was 4G wasn't going to be as big as it ended up being. And we're not making that mistake again, because we were the first in 5G and we're going gung-ho into 5G, and we're seeing the traffic coming. It's not a wish, if you build it, they will come. They are already coming. In some of the institutions of higher learning, we're seeing up to 50% of our traffic coming onto the 5G network. But we locked ourselves into technology contracts, and we are a responsible ethical company. So we will respect those contracts until the end of the period. Otherwise, we'll have a discourse and a makeable restructure of those contracts. But as those contracts expire, in a disciplined, transparent form, we are looking at ways to move them into space and power, which is more cost effective, and to move away from the forex denominated dependency on those contracts. So we've had a bunch of towers that are expiring, 2,500. We've given those to ATC. We are firmly going to execute without any major disruption to quality of service in that transfer. Another 1,500 expiring between now and 2025. We will look at those with the exact same rigor, and we'll select the partner that gives us the best economic terms for MTN Nigeria. Rob is here. He's going to give a few closing comments. He has to worry about his shareholding in all sorts of entities. That's not my problem. I'm accountable to Dr. Ndukwe for my EBITDA margins, for MTN Group, and for minority investors as well. And so we're razor focused on growth, we're razor focused on capturing opportunities, we're razor focused on customer experience, technology leadership, and we're razor focused on disciplined capital allocation and efficiency. Hassan has told you a great story about the rest of our business, how our connectivity business is going to grow. Eli has also told us a great story with all the wealth of experience that he brings, not just from Ghana, but from the entire MTN Group in Fintech. Above everything else, Rob is going to give the actual closing remarks. We have brought him all the way here. I'm forcing him to come and participate in this, even though it's a Nigeria Capital Markets Day. But before he does, if I don't say this personally, to the team back there, the media production team, the IT people, Eventful, Diana, Lucky, Chima, Muiz, everybody, the transport team, Dio, Sunday, security, thank you, thank you, thank you. This venue, the organization has been excellent. We will be back next year and we'll make it even better. Thank you very much, everyone, and we'll catch up at lunch. Thank you.
Carl makes my closing remarks very simple, but firstly to acknowledge all the protocols that have already been made in thanking everybody for a wonderful 2 days here in Abuja. We thought we'd make it Abuja so that people who really want to understand the story understand that they must travel largely to Lagos and then have to make another trip. So we know the people who came here were really committed to hearing the MTN story. So first, we'd like to really thank everybody for making the time to come up to Abuja for these 2 days. We trust that you found the 2 days very insightful. The engagements on the investment case of Nigeria don't end today. So if there are any questions that you still have, there's plenty of time to actually still go through all of that. On behalf of the MTN Group, I do want to thank Carl and the team for putting up these 2 days. We set out a couple of objectives when we announced in early June that we'd have a Capital Markets Day in Nigeria. We didn't understand how things would pan out, but we felt that it's best we tell our story to the providers of capital in the way we know best. And wherever we find ourselves, we'll tell the story. And the objectives were really threefold. The first is to expose the investors to the authorities, in particular around how the structural reforms were being made. We don't have any particular additional insight, but I do think that we do, as a company that operates in Nigeria, very close to the ground and understanding how things are working, that we can actually develop a view about how the near term would look and our thoughts about the medium to longer term. We have been consistent as MTN Group that the structural reforms that are underway, particularly around the exchange rate, around fiscal policy and monetary policies, that these are the sound ones for Nigeria to ultimately reach the potential that it always had. And over the last 2 days, I trust that investors have gained additional insights into where the exchange rate is going in terms of the policies that the CBN now is implementing. And as was communicated in the sessions, and particularly by His Royal Highness, the former central bank governor, in the way he reads it, is that all the actions are in the right directions. around creating tighter monetary policy. And we're seeing all the actions, you've seen what's happened on the Momo bills in recent days. So these are the things that are moving in that direction. I think we've additionally understood the issues around fiscal reforms, particularly around simplifying the tax code. We heard earlier on that the tax code is very complex. The president is very committed towards simplifying it and creating a tax code that attracts investment rather than keep investment out. So we were very heartened by those messages. And from the sector minister, a clear message really around the centrality of the digital economy to sustain and drive inclusive growth. And we heard all manner of proof points around the commitment of the Nigerian government in terms of the centrality of this sector, which is 18% of GDP. And I would argue and say humbly, MTN is at least 50%, so MTN is contributing about 9 percentage points of GDP contribution in the way that we are involved in the value chain and the sector. So we trust that that piece of external views that give you the sense of the near term, we remain of the view that the next couple of quarters will remain tough, but if the reforms come through as we get into H2 next year, we should start seeing a very important point, which is that the margin starts to repair, and I'll come back to some of the concluding comments really about the investment case issues that I would like to summarize for investors that we would hope you took away from today. So we hope that that one came through. The second is, we still believe that the structural growth opportunities for data and fintech services remain sound and strong in Nigeria. You saw the point that says we have only 53% smartphone penetration. Data has just exceeded voice in its total contribution to revenue in the last couple of months. I think it was the month of August that we saw that transition happening. So the data story is at a very nascent development point, and we are capturing a substantial share of that, even with our size and scale. And on fintech, very early days, you heard from Eli and the team, the network effects start kicking in as we develop the full ecosystem. And I think a proof point to watch out is to watch out the growth in the merchant ecosystem. You saw that chart that shows that in Q3 we had actually very, very solid growth of merchants, because you do need A party B that able to take on the mobile money transaction, the fintech transaction, and so that should be driving growth in the medium to longer term. So the structural growth opportunity. The final point would be that we as a business are very sober and understand the near-term impacts and the issues that we're prioritizing. So I think for the investors, the key priority focus for this business that you will see over the next couple of quarters is we are going to start seeing service revenue, moving up. You heard Carl talk, in a very light tone about price optimization, bringing on new plans, reducing free traffic to drive up effective yield. If those things do happen, what you do see is revenue accretion. So price optimization in the next couple of quarters, do ask the same questions. What is the amount of free traffic that you're providing on a promotional basis? And is that improving? Are you launching new plans, and how do those new plans, Carl spoke about the 30 plans that have been launched, if those become quite strong within our base, you'll see service revenue accretion, which obviously will support the next point, which is really that we're talking about margin recovery over the medium term. As we've spoken in the calls last week to the international investors, if you work through Modupe's points for Q4, the clean Q4 where you take out the provision for tax, it's effectively looking at a margin like 45%. If you simplify all the numbers to say what is a clean view of that, and you've got to put in the tax provision and a bit of the booster plan and all in there. And you should start seeing that service revenue, the margin, to start to improve. So there is an important story about the margin evolution that we will talk to with the full year results end of Jan next year. and lots of questions asked about why don't we. We want to see how things are playing out the next couple of weeks. We heard all the points around the clearing of the backlog of dollars. We're also standing in that queue as MTN. It gives us better visibility, and we will make the right pronouncements around the guidance that we provide into 2024 and further. So I think the margin evolution story is a very important one. And the final point is, the acceleration of fintech. A key part of the MTN Nigeria story is how do you get, that growth towards 30 to 40 million active wallets. Yes, we have 27 million registered. That's a big number. But for us, the economics start to really materialize when you have activity and you start to see the growth. And I think what Eli was saying, which is very important, is that the evolution of Nigeria will be different from Ghana and Uganda. What you will see is that the growth will start actually healthily because it's focused on driving advanced services. We're very clear that over time, basic services like P2P will get closer towards being free or largely free across markets. We're starting with your future fit revenue profile that as the base grows, I think you should see monetization coming through. So these are the things that we would say to our shareholders. Please continue to give Carl and us as well, Tulu and myself, a hard time around how we're progressing. But the important thing is we feel highly convicted as the group that the structural growth opportunity that remains in Nigeria remains compelling. A couple of quarters of structural adjustment that we need to work our way through. We will sustain investment in CapEx so that we do have the leading franchise that is best able to capture the opportunity that we see in the Nigerian market, which remains for us very exciting. And I also would like to believe that for our shareholders, particularly the international shareholders, that the relationships with stakeholders for MTN Nigeria and MTN Group in Nigeria remains very, very strong. We spend a lot of time here in Abuja and in Lagos, and we have a good set of relationships where we can discuss many things and sometimes agree but sometimes don't, but we're very well plugged in and have very good relationships that enable us to continue to manage the business and navigate some of the headwinds as well as some of the challenges that we come to from time to time. So again, wanting to express our thanks and really want to echo Carl's comments for the team that organized. I know it's not finished. There's still the market visits for those who are keen. And I know Carl and team are also doing an additional set of Q&As, particularly for the investors that travel very far. Thank you so much, and we trust that you found the 2 days very, very insightful. Thank you.
Thank you very much, the president of the MTN Group. Well, distinguished ladies and gentlemen, this will be bringing to a close the 2023 MTN Capital Market Day, Executing for Sustainable Growth. Well, very quickly before we close, the market visit will kick off at 3:30 p.m. The market visitation, we have all of you being ready at 3:30 with the boss. The Fintech and sales and distribution team will be available to lead you to the visits. And you'll be able to interact with the agents and merchants in the market. The markets to be visited will be the Wuse and Gariki markets. Takeoff time is 3:30 p.m. But right now, it's lunchtime. Like we did yesterday, those who are seated on the sofa will go through the door to my left for your lunch. Just behind those chairs, you will go through the back to the other venue for lunch. Only the master of ceremony will visit the two venues and see what's being served. So I want to thank all of you for being part of it and being wonderful audience. God bless you all. Have a wonderful afternoon.
MTN story of innovation in Nigeria. Guided by our Ambition 2025 strategy, we continue to partner with relevant platforms and institutions, leveraging our profile as the most trusted and valued brand in Africa. In localizing this strategy, we are driving digital and financial inclusion as embodied in the core priorities of Ambition 2025. We are excited to be the first telco to roll out 5G in Nigeria with over 800 sites and counting, and to have grown to about 500,000 Momo agents and merchants pan-Nigeria. We are committed to ensuring that we provide, through these platforms, all the access at the fingertips of every Nigerian. Because we truly believe that everyone deserves the benefits of a modern connected life.